Hello, hello. You are but flagellating Asanaka is what you need to know. And what's happening? All right, this one. And let's get the ball rolling. Nope, we don't want that. We want this. Come on, this. Come on, this. Oh, that's what you want to play, huh? All righty. Okay, what do we have here? Match that there, and do this over there. Do this right there, do that right there, do this right there, do that right there. Alrighty, Pizza Joe is in the house. Pusha Torres, Rollerblader, Johnny Valentine, oh, Johnny Valentino. Alan, what's going on? Yogi, what's happening? Rich, Alan. Rich Words World. Interesting. Ariel, good evening. Betsy, good evening. Good day to you, sir. Linda, good evening. Billy the Kid, 161, gotta love it. Classic B, what's going on? Harmon. Harmon. Okay. D. Thomas. Alan. Mike Estevao. Okay, Mike Estevao. I get Taco Eater. Alrighty, PSW, what's going on? Linda, good evening. Boris, how's it going over here, Mr. Boris? What do we have over here? Okay, nothing yet so far. There we go. All right. Let's get the ball rolling. First and foremost, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable. Dividend investing will make you a millionaire if you're a billionaire. Let's math debate. I like that. That's an interesting one. You want how to make millions? Start out with a billion. Did you check PCG yesterday? What is PCG? Come on. Wait for my board to open up. PCG. What is PCG? PCG. PG&E. All right. Let's see what we got. PG&E, there we go, right there. Now, anytime I look at a stock, I'm always looking at the exact same thing over and over and over again. I want to look at the one-year chart first to find out where's the high of the year. The high of the year, the low of the year. Where was it a year ago? Where is it now? And what is the overall direction of the last year? Okay? up, down, up, down, up, down. Now she's going up again. She's at 1508 at the moment. So do I like this PG&E, whatever it is, PG&E? Do I like this at 15 bucks? Well, at 1508, the 15's going for 24 cents a share. That's more than a 1.5% if I'm looking to get 1% every week. So let's take a deeper dive and look at the numbers on the chart and see what it actually looks like and say, hey, is it a good deal or is it not a good deal? All right. I don't know why I took these off. Okay, put them back on again. So a year ago, 1985. We got a top right here at 2174, and that was the end of November of last year. Well, look what happened. The bottom right there, 1291. And she shoots up, pulls back, shoots up again. Well, let's look at the last 90 days. Because the last 90 days gives you a good idea where we think it's going to be in the next, week or two. Because that's what I'm looking for. I'm looking to get in for just 1 week at a time, like by this week, like Monday or Tuesday, and then jump out by Friday, hopefully. What do we have over here? It's a company of energy. Okay, thank you for that, Robert. Thoughts on government shutdown. I love the idea. I just wish it actually happened. Imagine that big government debt sign would actually stop. And we'd stop spending money. I think it's a great plan. Call them to work. Once a week, twice a week. Time to meet. There you go. Show up, you get paid. You don't show up, you don't get paid. I think that's how you should do it in Congress. Get a couple of bills that make sense to the average Joe. Vote on it, go home, stop getting paid for doing nothing. What do I know? Anyway, so we're looking at the exact same thing. Where's the high? Where's the low? Where was it a year ago? 3 months ago. 90 days, 3 months. Where was it 3 months ago? Where is it now? Down, up, down, up, down, up, down, up. Now she's going back up again. Here's your bottom here. Now she's going out. That's a nice strong signal to the upside if you like PG&E. It's always come down to that catch, doesn't it? Robert Bilstein. It's an energy monopoly is in California. Yeah, I know that. Alex, thank you. Nice to be seen. Better to be seen than viewed. Defund the government. That would be so awesome if we could do that. But basically, what I'm looking for when I look at the last 90 days, I'm looking for repeatable patterns. Up, down, up, down, up, down. Then I want to look at the time frame between them all. Okay? Because we buyers and sellers, we do basically the same things over and over again. We're here to make a profit. Okay? So it looks as if she's ready to go up again. I can move that wire out of my way before I trip over it. The last 30 days gives me a better idea of where do I think it's going next. So the 30th was on a Sunday. So we're looking right here. Here's 30 days ago. 30 days ago, right here at 15. We drop, shoot back up, drop back down. Now we have 1, 2, 3 days to the upside. 30-day top, 30-day bottom. Now she's going back up again. That's what we're looking for. We're looking for companies that we like, whether you agree with their monopolistic endeavors. I mean, someone's going to provide electricity over there in California. Now, so do you like the company? That's a good one. So let's do a quick trade us. Now, for those of you who don't know, my name is James. This is Dividend Stock Talk, where I'm looking to get a 1% simply, safely, predictably, consistently, and profit. I love the Lee family. Simply, safely, predictably, consistently, and profitably. I love the Lees. Anyway, does it make sense? So what I'm trying to do is a simple, safe trade, also known as a covered call, where I buy the stock at one price. I sell it to someone for almost the exact same price I just paid for it. And basically what I'm looking for is to capture this right here. This is the premium payment for the insurance policy. Well, because someone is insuring a position against something else. That's basically what it is. Okay, so for that, I got no problems whatsoever buying this thing at 15.08, turn around and then reselling it at 15. Well, my profit's going to be 24 cents. Well, you're probably thinking, whoop-a-de-doo. Yeah, but here's the thing. That little premium right there is more than 1% of the purchase price of $15. So if I can get 1.5% this week on this company, okay, whether you like them or not, because somebody over here, somebody on screen one, because we're live broadcasting on 9 different platforms. Okay, so screen number 1, way over there, somebody doesn't like PG&E. But besides the point, are they consistently profitable? Cotton Express. You need to explain yourself a little bit better, because that just makes no sense to me whatsoever. How are you going to feel when your boy sends troops to Boston to fire upon Americans? Oh, you mean Boston? Oh, as in Boston, Mass, when they go to fire upon Americans? Well, are those Americans? Don't get me started in politics. You do not want to hear what I have to say. Thank you for reading my comments out loud. That was cool. I'm more of a day trader, but I love your system. Thank you, Robert. Anyway, yeah, please do me a favor. Don't go. No politics, no religion, no Amway, no NASCAR. Let's just talk stocks. Stocks and money. That's it. What's my win percentage ratio? It's over 95. I know that much. Wealth Now, dude. We'll take a look at Nike in a little bit. Let's finish up with PG&E, because we're going to do a sample trade. Okay, now what do I mean by sample trade? A lot of you guys are new here. I do covered calls on dividend stocks specifically just before they go up in value, based on some historical performance and some historical stuff that we've been watching, keeping our eye on. So if we know when a stock is going to move, well, that's one piece of the puzzle out of the way. Great. Well, now that you know a stock's going to move and when, what do you do with that information? Well, when my 9-year-old daughter asked me, Daddy, can you teach me how to invest in stocks? Okay, most adults don't get it, but here's a 9-year-old wanting to. I had to come up with a strategy specifically for her. So we're going to do one right now so you can see how it works, because it's not that difficult. Okay, number 1, never buy something you don't want to hold on to. Number 2, never sell for a loss, because it just doesn't make sense. Number 3, only companies that are consistently profitable. Me personally, I like 2 decades of profits. That's what I like. Stock market's been around for 400 years. So to find a few companies that are profitable for at least 20, that shouldn't be that difficult. I mean, the U.S. economy is full of them. Rule 4, weekly options only. The only way I'm going to get weekly cash flow is to find something that trades on a weekly basis. And that's weekly options. The right to buy, but not the obligation. That means I can buy it if I want, but I don't have to if I don't feel like it. Unlike a put, and then you're obligated. So anyway, I got a couple questions over here. JD Movements, not quite sure who those are. Tell them you're going to feel great. All right. Cash secured puts and covered calls bring me in regular money. Love it on the right stocks. Awesome, Luke. I'm going to agree with you. Don't ask about NVIDIA, please. Jeff, thank you for that one. Don't ask about NVIDIA. Don't sell at a loss. That's crazy. The loss could be bigger. Well, Brad, if you think the loss could be bigger on a stock that you like, and because remember, rule number 1, never buy anything that you don't want to hold for the long term. Long term is not a week or two. Okay, long term is years, decades. Okay, so if you don't like a stock that you want to hold for 10, 20, 30 years, don't buy it in the first place. MA, explain the Greek. Okay, the Greek, Greec, also known as a nationality for people who live in Greece. Don't get me started on the Greeks, because that's something that not a lot of people understand, and me trying to explain it for people that here to learn a strategy created for a 9-year-old, you're getting way out of line. Because, why not just talk about the Black-Scholes pricing methodology for standardized options? That's a good one too. Why don't we throw that in there? Or the Fibonacci sequence and the importance of the MACD over the... Yes, don't get me started on that. This is simple, safe, predictable, consistent, and no way for my 9-year-old daughter to lose. So to ask her to explain the Greeks' option pricing methodology, that's just silly. Because how... Never mind. Okay, if it looks right and the numbers are right and everything's pointing in one direction, the Greeks don't mean anything. Terribly sorry to disagree with your thinking, but it is what it is. So let's take a look. The last 30 days, this is definitely that drops down here. That's definitely the bottom. Now she's going back up again. Well, great. If I do a covered call at 15, sell the 15 and bring me 24. So let's see what the numbers look like. Let's do a quick trade. Covered call, the 15 right there, one contract, that way you can understand one contract is going to be this, 5 contracts are going to be that, blah, blah, blah. You should have paid attention in math. It's all simple math. Okay, so here's the trade. I always tell people to read it slowly and enunciate what it is you're looking at so that it makes sense. So here's the trade right here, this big, huge green line. So I'm going to say it slowly, and I'm going to enunciate each section so you know what you're looking at. By one, covered call, PCG. Okay. 3 October 25. That means this option trade is going to end or expire 3:59 p.m. on Friday. Because at 4 p.m. you can't do anything. The $15 call option, which means I'm selling it to someone else at $15. Okay, and they have the right to buy it from me anytime between tomorrow morning and 3:59 p.m. on Friday. So they got 3 days to make up their mind. And for that privilege, they're paying me $24 per contract. Now, I know $24 per contract doesn't sound like a lot, but we're not looking at 1 or 2 pennies. Okay, we're looking at hundreds. So it's 24 cents per share. Okay, that's per share. So 100 shares is only $24, but 1,000 shares, well, that's $240. And then 10,000 shares is $2,400. So the numbers get bigger as you slowly progress. But it's always going to be the exact percentage, because $24 on one contract is going to be the exact same percentage as $240 on 10 contracts. It's still the same numbers. Uh-oh, someone just gave me something I didn't know it was. Anyway, all right, so let's get out the calculator and see exactly what the rate of return for 3 days is. Because today's Tuesday. Monday's gone, Tuesday's gone, Wednesday, Thursday, Friday, this option expires, so 3 days. So what kind of rate of return is this trade right here going to give me for Wednesday, Thursday, Friday, 3 days? Let's find out. Calculator, $24, which is the maximum profit on one contract. Okay, cost of the trade including commissions and fees, $14.76. So, okay, $24 divided by 14.76 comes to a grand total of 1.6 for 1 week. 1.6% for 1 week. Well, it's actually only 3 days because we have Wednesday, Thursday, Friday, and then that's it. And then we could, on Friday, depending on where the stock price is. Because if I'm looking to do this, right? If I'm looking to buy the stock tomorrow morning at 15.08, that's the current price, 15.08, and I'm going to sell it to someone else at 15. The stock just has to stay above 15 by Friday. But here's the nice thing about it. Let's get out of this. Get out of that. get back to that, get back to this. Okay, so currently, here's the stock right here. The 30-day high is right there. 30-day bottom's right there. It is definitely going towards the upside at this moment in time. So if I'm buying it at 15.08, I'm selling it at 15, picking up 1.6% for 3 days. Well, I think that's a good trade. And I like PG&E as a company. I don't like their ethics, but I like the company that's consistently profitable. You have to ask that question to yourself also. Do you like this company? Are you willing to buy it and hold it? Okay, contrary to belief over here, never take a loss. Because if you pick the right stock in the first place, you just don't pay attention to when it goes down. Because investing in stocks is a long-term process. I mean, granted, that's not what we're doing here. But the overall, you invest your money into a company. As the company grows, your money grows. Well, that's basically what we're looking at. So when I say don't take a loss, why would you buy something and sell it for less than you bought it for? Because then you're second guessing your choices. You either like the company or you don't like the company. Choo-choo-ka-choo. Is NVIDIA a good investment? He knew someone said don't ask him about NVIDIA. He knew someone was going to ask. Someone always asks about NVIDIA. And I'm going to tell you my humble opinion. My humble opinion, and it means absolutely nothing to you. It should mean absolutely nothing to you guys. But this is the way I look at it. Okay? We looked at NVIDIA last night. Okay? NVIDIA is like $181 per share. At least it was last night. Okay? It pays a 1 penny dividend every 4 quarters. You know, once a quarter, four times a year. So it pays 4 cents. So you're buying a stock for $181, and the dividend you collect is 4 cents. Now, the revenue, I think it was like $6. Wasn't it like $6? It's a weird number. $16 per share. So you're paying $181 for a stock that brings in $16 a share, and the book value is only $4 or $6. I think it was like $4. But it's absolutely horrible. I was in NVIDIA 10 years ago. Okay, yeah, I get that. There's nothing wrong with it. It's not a dividend stock. Well, it is a dividend stock, but not really. Because the dividend, 1 penny, for 108, no. That's just my humble opinion. Okay? And it hasn't increased that much over the years. It's a growth stock. Okay? People put money in it and they watch it grow. If you're looking for cash flow from it, you're looking in the wrong direction. All right. So we're done with this one. PCG. I'm going to write that one down because I like those numbers. Imagine that. PCG. What was that price? What was that price? That percentage? 1.62. Okay. 1.62. That's 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 companies we found just for this week. Cool beans. All right. Let's continue. Is the bid the same as the premium? Miss Madeline, how are you doing today? No. Okay, the bid. There's the bid and the ask. Okay, let me give you a quick little example, Miss Madeline. If you go to a grocery store to get yourself a gallon of milk, well, because you can't buy it from the farmer, okay? You can't. Okay, the farmer sells to the corner store. Let's say it's 7-Eleven, Quick Stop, Quickie Mart, Circle K, whatever. The corner store. You know, go out the house, around the corner, there's the corner store. Okay, so the market maker or the store owner, same person, store owner, will buy a gallon of milk from the farmer for $3 a gallon. He will then turn around and sell it to you for $3.50. The bid is what the store owner pays for the gallon of milk, $3. The ask is what he sells it to you for, $3.50. The difference between $3 and $3.50, the bid and the ask, is the profit that the store owner makes or the profit that the market maker makes. With over 300 companies on your list, how do you go through them all to choose your options on Monday? Gabriel, Tanya, woohoo! Thank you. Okay, Gabriel, you were here the other day when we explained this. Okay. So step one, come up with a list of stocks. Okay, 300 companies. Great. You take those 300 companies and you throw them into an EX dividend calendar. Because the calendar will separate all of those 300 companies by when they pay their dividend. That's very important. Because when they pay their dividend, what do we got here? Campbell's right here. Medtronics, Best Buy, Waste Management, Pepsi. Okay, I could buy Pepsi this week, grab a profit. Great. Waste Management this week, grab a profit. Best Buy right here, grab a profit. Humana, grab a profit. Campbell's Soup, grab a profit. I can buy one each week. There's 300 different decent companies that are consistently profitable. You stick them into the calendar and it's broken down, not by who they are, not by what they do, not by how much money they get. The only way they're broken down is by when they share their profits with their investors. And that's us. That's you and me. We are the investors. When we buy stocks, we invest. Okay, we put our money, we trust our money to someone at the other end of this equation. Well, CPB, that's Campbell's Soup. They've been around for over 100 years. Well, yeah, I think this is a good company. Ooh, JFM. Woohoo, thank you. I like them. But is it a company you want to buy and hold on to? That's a good question. And if I'm buying Campbell's Soup, well, I don't want to hold it forever because it goes up, it goes down, it goes up, it goes down. I want to buy Campbell's Soup just before the dividend date because most dividend stocks have a tendency to go up in price just before the EX date, which is these little green dots. So just by knowing that, well, I'm looking at these companies this week. That's it. Next week, I'll look at these. In 2 weeks, I'll look at these. 3 weeks, I'll look at these. I don't cross them back and forth. Because when a company's paying out a dividend, they do it basically the exact same date, year after year after year. Predictable. Remember the part where I said predictable? Simple, safe, predictable, and consistent? Well, these companies have been consistently increasing their profits year after year after year. And they pay the dividend every September, the first week. Halliburton, Schlumberger, Southwest Airlines all pay a dividend in the first week of September. First week September 2024. First week September 2023. First week September 2026. Year after year after year, these companies, the exact same time, year after year after year. Because they've been in business for years. Campbell's Soup's been in business for over 100 years. Bristol Myers Squibb, over 100 years. And they're consistently profitable. So no, I don't look at them anything other than the calendar. That's it. Okay, this week I'll look at these. Next week I'll look at those. And I don't cross back and forth. Because after the dividend is paid out, a lot of the times, not always, but a lot of the times the stocks go down. So if the stocks go up coming into the dividend and they go down after the dividend, well, doesn't it make sense to buy it before and then get rid of it when it's at that peak? Alex, I'm guessing you use very similar companies every 3 months. No, Alex, you're 100% wrong. I use the exact same companies every 90 days. Because Campbell's Soup pays on the first week of the quarter. Which means, see, wait a second, look, right here. Campbell's Soup, which is the first week of the fourth quarter. Okay, Campbell's Soup. Bristol Myers Squibb, Comcast. So let's look at the first week of the third quarter, which I believe was in July. Bristol Myers Squibb. What was the other one? What the hell is it? Campbell Soup. How often does Campbell Soup pay a dividend? Because some of them only pay once, so some pay once a year. Some pay twice a year. Some pay 4 times a year, every quarter, and some pay every single month. Well, Campbell Soup, well, let's go back to the first week of the second quarter. Okay. Sony JD time. Why are we not seeing everything? There's more than 5. I know that much. January. Now they're just not putting them up to aggravating. Well, now that's not nice. All right. So much for that idea. Let's go back to October. Here we are. Anyway, they're the same week after week. You know what's easier? Hold on. This will be easier. Check this out. Right there. We were just talking about Campbell Soup. Campbell Soup, right? CPB. Now this is finance. I use Yahoo Finance. I detailed information of financial information that I need information for because that's what it is. All right. Progressive. Because that's all right. July 3, 2025. July 3, 2024. July 3, 2023. July 5, 2023. July 6, 2022. July 6, 2020. July 13, 2021. July 2021. July 14, July 2020. July 11, 2019. You get the point. Every 90 days. Every 90 days. Okay, July, so on. July, so on and so forth. Every 90 days, Campbell Soup pays dividend. And a year it's higher and higher and higher. Well, that works for me. I like Campbell Soup. Anyway, the information you should have at your whatever website you want to use. I use Yahoo Finance. I think I may have looked at Google Finance maybe once or twice. Once I saw this, I started using this. Oh, this is easy. We got our summary here. Research, statistics, I love historical data. Historical data tells you every single price, the opening, the high, every single day. Every day you can take a look. At what has this, how has it formed. Well, using this information, you can come up with a lot of ways of using it. Let's get back to where we were. So that's my answer to that question. Yahoo Finance 2. But some financial reports are not free. You're absolutely right. Hold shares all year to get dividends. No, Tim, you don't. They pay quarterly. Thought so. I'm guessing you. Okay, great. You got everything. Dylan. Where is Mr. Dylan? What about Mr. Dylan? How about Rhea? What is Rhea? R-A-Y. All right. Let's get out of there. Let's go back here, and let's look at what is next. Pilot Life wants to take a look at BITO. B-I-T-O. Is that one of those Bitcoin ETFs? It is. Imagine that. Now, I don't think BITO has dividends, but I did trade a while ago. B-I-T-O. And they do have dividends. They only have not even 2021. So 2023. So this thing's not even 3 years old. Why are you investing in a company that's only 3 years old? Very first dividend was February 1st, 2023. 10, 46, 41. That's down. 40. That's up. 38. That's down. A half a penny. Come on, that's horrible. 7 cents. 14, 12. That's down. 14.35. It's all over the place. No consistency whatsoever. But then again, it's one of those ETFs that's leveraged. That's what you're looking at. No safety there whatsoever, in my humble opinion. Okay. Do you put your up on your website same week, or are they from the week before? The week before, Gabriel. Is your strategy cash secured puts and covered dividend calls on dividend stocks? I don't do puts, but you're about right. How about FIBK? What the heck is FIBK? Anyone? FIBK. First International Bank. No. Okay, now the reason I say no, Gino, the reason I'm saying no to FIBK, October, November, December, these are months of the year. That means this is a monthly optionable stock. I don't do monthlies, the numbers just don't work. Just don't work. Wealth Now, CRCL. What is that? CRCL. Circle Internet. Okay. Well, let's take a look and see how wonderful these dividend payments are. CRCL. Because I want to invest only in companies that are consistently profitable. So if I don't know, well, that means I have to go back and look at what? 20 years worth of quarterly reports and annual reports to see if this company's profitable, because it has no dividends. Because it has a dividend portion of the now, if dividend is the profit the company gives us back, if the dividend increases, will so do the profits, because you can't have a higher div without a higher profit. Well, if the dividend goes down, that means the profits went down also. So when I'm looking for a company, I'm a lazy trader. I have no problem admitting. Find a good set of companies. Well, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, one of 3 profit companies. Throw them into a simplest, safest, most predictable trading strategy just before they pay the dividend, because they pay the dividend goals before the dividend date. This, along with the chart and the calculator, my success rate is well over 95, 96%. I think I got 4 losses. I think I got well over 1,500 trades. I think I got 4. That's about it. Because it's boring, it's repetitive, and a tiny profit. I'm only looking for 1% every week. Now, a lot of people say that's not worth it. It's not for most people. But I'm not most people, because 10 minutes a day equals 1% a week for me. So that's 1 hour a week equals 1% of my account. Now, if my account is $150,000, that's $1,500 for 1 hour of my time. Well, that's a different story, isn't it? I'm talking about 1%, and you think that ain't worth it. 1 hour of my time is worth $1,500. Worth 1 hour a week to work again. Don't get. Now I got 7 accounts. I share 3 of them publicly, so you can actually see the trades that I do. Okay, fine. All right. Let's get out of here. Circle doesn't have any profits. So that's my question. If it doesn't have dividends, how am I supposed to tell when to buy it? Because I'm going to be looking at this stupid thing all day long, and I've been looking at this stupid thing for over 20 years. So what makes this one so special? If I don't know when to look at it or when to buy it, how will I know? There's no predictability. There's no consistency. So that's the reason why I only do dividend stocks, because they're predictable and they're consistent, and they pay a dividend every 90 days. They share their profits, and it's easy to see whether or not they're profitable, because the dividend is higher this year than it was last year. Well, yeah, let's do that. Why would I invest in a company that's making less money this year than they did last year? I don't think that's a good investment. I want that wherever I put my money, I want to make sure that they're making more this year than they did last year. They made more last year than they did the year before, and then so on and so on. Okay, I don't want to get to a company that's just, make a whole bunch of money and then just do nothing. What's the point of that one? Because here's the thing. You may not know it yet, but when it comes to retire, and the money's not coming in, working 40, 50 hours, 60 hours a week, it's got to come from somewhere. So whatever investments you make during your working life, well, now that has to get passed on into your retirement life. How are you going to do it? You got two choices. You got to pick one. There's just no other way. Well, no, I suppose you could do absolutely nothing. Just put your money under your mattress. You could if you wanted to. But here's the thing: when you get retired, the bills still come due. The mortgage still comes due. The insurance still comes due. Grocery bills, vacations. You're going to be doing that a lot more. Everything. So the money's got to come from somewhere. So do it yourself or give it to someone else to do. Now, some of us have the privilege of taking that big, huge chunk, giving it to someone else, and not having to worry about what the rate of return is. Unfortunately, that's not me. I have to work for my money. So the 1% I make every single week pays for all my bills. Anyway, let's keep on going. What day do you sell the dividend stock? On or after the EX date? Gabriel, I don't like to go into the EX date. Okay? Strange as that may be, I don't want to get to the dividend. Because when this dividend comes up, the week of the dividend, well, that dividend's already factored in to the premium payment. So the premium payment on the week of the dividend, it's usually a little bit less than 2 weeks prior to the dividend. Because I want the highest rate of return, so I want to buy it 2 weeks before the dividend. Get that little 1 or 2%. Get out before the dividend comes, because usually after the dividend, stock has a tendency to go down. So I don't want to be there. I want to be done and gone. So Gabriel wants to take a look at Hormel. Now Hormel is one of those companies that's been around for over 100 years. But I think they're a month optionals. No, they're not. They're weekly. Okay, fine. So here's Hormel. Dividend King, which means 5 decades of consistent profits. Here's the high of the year, the low of the year. Where was it a year ago? Where is it now? Look at this. Down, up, down, sideways, down, down, up. That's what it's looking like at the moment. So you got a couple of questions to ask. Do I like Hormel? I'm not just talking about the chili or whatever else they make. Do you like it as a company? Do you think it's a safe place to put your money? Okay, they've been profitable for over 50 years. That's 5 decades. They're Dividend King. They're over 100 years old. They've seen a lot of crap in the last 100 years, and they're still here. That's got to stand for something. Now, granted, it's not a huge profit. It's not something that's going to go from 24 to 60. No, it doesn't have that capability, because that's not what it is. Because once you get to a certain size and you bring in a certain amount, you're just a monstrous company. Like Hormel, it's harder to grow. Now, smaller companies, it's easy for them to double, triple, quadruple. Not so much with a big, huge company. So anyway, I'm looking for consistency of profitability. Hormel fits the bill. A year ago, 31.94. High of the year, middle of December, 33.87. Okay. J. Rob wants to take a look at PPL. Okay, Story Hub, I don't do gold. Okay, gold does not have weekly options available and is nothing more than a big old dust collector. You take a big block of gold, drop it on your desk, what's it going to do? Collect dust, paperweight? There's no cash flow from gold. Sorry. It's a great storage for wealth. Storage for wealth, not weekly cash producing asset. Sorry, gold is just not a weekly cash producing asset. All right. Last 30 days. Because that's going to give me a good idea of where it's going next. Here's the last 30 days. Okay, 30 days ago, here's your, okay, a week ago, here's your bottom. Down, up, down, up. Simple, if you look at it that way. Remember, the strategy I'm sharing with you for free, I'm not asking for anything, and no, I'm not going to try to sell you anything by the end of the night, okay? We're all adults, we know how it works, okay? We all know I've written books, we all know I do this, we all know I do that, so go to the bio, wherever you are, and sign up there if you feel like it. I'm not going to try to push anything. So the high is here, here's the bottom, now she's going up. But the question, do I like Hormel? That's something I can't answer for you. You have to figure that one out yourself. But it's $24.74. Closest strike price is going to be the $24.50. Because the 25 is only paying 5 cents. Okay, this one ain't even worth it either. Because $24.50, I'm buying at $24.74, I'm losing 25 cents. You take 25 cents off that, I'm walking away with a nickel. Hell no. No to Hormel. Even though this right here looks great. It really does. Look at it. It looks great. Okay, 30-day high, 30-day bottom. Now she's shooting up. Well, great. If I do that with a simple, easy strategy, it's not profitable because this right here is not 1%. So, no. Next. Sorry. Don't get me wrong. You know, I like Hormel. I haven't bought it very often because you'll notice the big, huge old companies, this right here, they don't have to pay us 1% because they're so freaking huge. They don't really need our money anymore. Anyway, that's Hormel. Wealth now. Nike. I have some Nike, by the way, just in case you're curious. Here we go. Same thing. It's the same stocks. So you guys come here all the time. It's like, why is he looking at the same stocks over and over again? Because they just work. That's just it. All right. High. Low. Where was it? Where is it? Down. Up. Down. Up. Look at that movement right there. The last 3 or 4 days. That's what I'm concerned for. Because the last 3 or 4 days gives me a good idea. Where do I think it's going to be tomorrow? Thursday, and then Friday. And if, because it looks like it's going up. Let's zoom into that a little closer so you get a better look at it. Okay, here's your 30-day high. Drops. The bottom is right there. Friday. Monday's higher. Today was higher. That's 2 days to the upside. Well, actually, it's 3 days to the upside. This is an up day, up day, up day. That's 3 up days in a row. How many do you need? Because it's all personal preference. There are no rules. If you think this is the bottom and that's a good place to jump in, great. Do it. If you don't do it. It's actually that simple. Flip a coin, heads, tails, whatever. So 69.73, I'll be looking at the 70s, and this is not accurate. And the reason why it's not accurate, this is the last traded price. And this is the new price. Because the new price is after hours price. So it makes it challenging to try to figure out these numbers if they're using after hours numbers. This is the last trade of the day, 69.73. So I would be looking at the 70. However, the stock is now trading after hours at 72.69, which is up. Anyway, I do like Nike. I do. So you have to decide, do I like this company? Am I willing to hold on to it? What was the deal with the drop today? Was the government shutdown scare that happened every year? How about ConAgra Brands, NOAA, CAG? Interesting. Take a quick look. Here's your top. Here's your bottom. You make most of your money investing in the stock market. Simple. Buy low, sell high. You cannot get any lower than the low of the year. Well, guess what? Ta-da! Here it is, the low of the year. It looks like the low of the year at this moment is yesterday. Because today we have a higher bottom and a higher top. I can zoom in a little bit closer even so you can get a really good look at it. Right, there it is right there. The bottom was yesterday. This is today. A higher bottom and a higher top. So this could be the bottom and going up. Now that's just one day. Me, I like 2 days to the upside, and then on the third up day, I will jump in. That's a rule for me. You've got to figure out what your own rule is. Okay, you could just like jump in at the market open in the morning and not really care what it is. Well, that's what I usually do. I jump in the morning if I see my three up days. Then I'll just jump in first thing in the morning, not really caring what it opens at, because I'm past that point. Because I'm looking for the consistency of profitability. I'm not looking for the stock to go up. I'm just looking that the company is profitable. I'm down. Oh, Dylan, you're down $600. Hey, Dylan, I'm not quite sure what you're talking about. Hey, Dev. Dylan, what was the deal with the drop today? Don't know. Where do you think gold will reach? Don't know, don't care. I don't do gold. I'm Donald's on as well. CAG looks like a good buy-in. Bill Gates. Okay, so Dev and Dylan, I'm not seeing what you did, so it's hard for me to tell what you did. And what has he got? What has he got? Okay, J. Rob wants to look at PPL. Pakistan Petroleum. Is that what you want to see? No. I don't do monthlies. October, November, January. Now, if I'm making 1 or 2% with each option trade I do, if I do a monthly, which this is, I can do it once a month, 12 times a year. So 1 or 2%, 12 times a year is only 12 to 24% per year. Well, if I'm making 1 or 2% on a weekly option, 52 times a year, well, that's over 100% return. Well, 50% to 100%. Why would I want to do monthlies? And then I got to figure out where it's going to be in the next 30 days. Okay, this is about 30 days. Take a look. Okay, down, up, down, up, down, up, down, up. Okay, it looks great, right? It looks great. Where's it going to be in 30 days? That is 30 days. Look at them all. Where's it going to be in the next 30 days? Trying to work with monthly options, you have to have a good feel for where do you think it's going to be in 4 to 5 weeks, because that's when the next option is. Well, it was at 36, dropped to 35, jumped to 34. 36, dropped to 35, jumped to 37. Oh, great. Where's it going to be in another 30 days? It's not that easy to see. And then how much money are they offering? 37 to 37 is going for 65. That's 2% for 4 weeks. That's a 0.5% a week. Why would I do that? And then now I have to figure out where's it going to be in 30 days. I just don't like monthlies. The numbers just don't work. Sorry. Oh, Gabriel, what do we have? What do we have? What day do you sell the dividend stock, or on or after the EX date? I like to buy on a Monday and let it get carried away whenever, or a Friday. It's always day by day the different choices, because we don't know what the stock's going to do tomorrow. We don't know what it's going to do Wednesday, and we don't know what it's going to do Thursday. So by looking at it every single day, first thing in the morning, okay, what did I buy it for? What option did I sell against it? Where's it at now? What does that mean, and where is it going next? And what should I do? They're very simple questions, and the first couple are easy. As soon as you buy something, that number never ever changes. What you bought something for never changes until you do dollar cost averaging. And if you never do dollar cost averaging, well, that price never changes. Then you got to find out, what did I sell against it? What did I bring in? Am I bringing in a profit? Am I bringing in a loss? Is it a good one? Is it a bad one? A lot of different questions going on. But still, the strategy was created for a 9-year-old. Okay, does it make sense to her? If I buy it at $37, want to collect 1%. That's 37 cents, and the current one is paying 65. Well, that's 1.5%. Well, that can kind of make sense then. But it's a monthly, so I have to carry it for 3 weeks. So no, I don't like that idea, because that's not 1% a week. I don't do monthlies because the numbers just don't change. It just doesn't work. Who is buying the chill? Who's buying that chill? I need to know. I have no idea what that means. Are you buying covered calls or selling covered calls? Do you have a book I can buy or learn? So crypto, I've written 14 books. Most of them are on Amazon. You'd think I'd have them on my own website, but no, I don't. Who is buying that chill? I need to know. I have no idea. Do you buy one at a time? No. I do all my trading on Monday. So on Monday afternoon, like Monday at 11 a.m., all my money's invested. I have Ford, and it's been increasing dividends, but in small percentages. Vonnie, how are you today? That's great. Okay, I bought Ford. A couple of years ago, Ford was one of my #1 producers. But now not so much. Let's take a look at Ford. All right. Here's Ford. I wouldn't be buying it now only because it's at the high of the year. Okay, here's the high, here's the low, here's where it was, here's where it is. Down, up. That's basically all it is. Okay, I don't buy Ford at this point in time because I don't buy at the high. It just doesn't make sense to me. Now she goes up, down, I'd buy there. Up, down, I'd buy there, and then it goes back up again. Well, that's all they do. They go up, they go down. That's basically about it. Logan, I have passed this channel before and am tuning in at the length for the first time. Just wanted to say. Well, Logan, welcome. Hopefully, Logan, you understand what it is that we're doing. If not, my hat's off to you, sir. This is an excellent content, and I'm sure the viewers appreciate it. Why, thank you, Logan. If you're gonna compliment me every time you come by more often. Kind of offsets the trolls, you know what I mean? I'm Vonnie. I buy one when I get paid, and I hold each share as they stack. Excellent idea, Vonnie. Excellent idea. I'll just move $20 on life or up on 100 on a good day. Not bad, Vonnie. Now, Vonnie, I understand the game you're playing. Okay, not bad. I mean, you're starting out, but I'd love to chat with you. If you want to drop me your number, I'll give you a call. I promise I won't try to sell you anything. I just want to open your eyes to something maybe you're not seeing. Because you're, from what it sounds like, you're starting off very slowly. There's nothing wrong with that. That's great. If that works for you, hey, fine. But if you want to hear a different point of view from someone that has been doing this for quite a while, maybe I can give you a little bit of a nudge in one direction. It's not a tip. It's not advice. It's just, hey, I want to hear your story because I want to hear where you're starting from, and I want to hear how you progress through the weeks, the months, the years. Does it make sense? Is it a yes or no? Mr. Freely, how are you today? Aren't dividend stocks for income for the rich? Okay, see, now Freely, what you miss, which a lot, don't get me wrong, a lot of people miss this, all right? What you said, aren't dividend stocks for income for the rich? Well, I hate to be the bearer of bad news. However, if you make, ready for this? If you make $34,000 or more, you are already richer than more than 60% of the world. So even if you make 35, 36, 37, you're already considered rich by the standards of other people. So when you say for the rich, well, that's almost everybody in the United States compared to everybody that's not in the United States. So it's all depending on what you're comparing who to. That makes sense. Clay Browning wants to know why on Monday. Well, Clay, here we go. You're relatively new. I'd noticed that name. But here's my theory. Okay? See if you can follow along. Each and every year has 365 days, roughly. Okay? That's 266 trading days, 12 months of the year, 4 quarters, January, February, March, April, May, June, July, August, September, October, November, December. Each quarter has 13 weeks. Kind of like a deck of cards. Think about it. Kind of like a deck of cards. 52 weeks, 52 cards. Okay? 4 quarters, 4 suits. 13 cards, 13 weeks. Okay, see, we are currently in, hold on, let me go back so it makes it easier. Okay, we are currently right here. It's October. Nope, we're not there. We are currently right here. We are here. September 30th. This is the last day of the 13th week of the 3rd quarter of the year. That's where we are today. Tomorrow starts the 1st quarter. So why on Mondays? Because time is defined. We all have 24 hours a day. We all have 7 days a week. Okay? When I do it on Monday, there's no trading on Sunday and no trading on Saturday. So 1 week starts on Monday morning, 9:30 a.m. Eastern Standard Time. They get a bell, ding, 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 at 9:30 a.m. every Monday morning. Well, actually, every morning. Friday afternoon at 3:59 p.m., that's the last opportunity you have to buy or sell anything. Because at 4 p.m., ding, 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 the bell closes, the bell rings, and the market is closed for the week. So Monday's the beginning of the week. Friday's the end of the week. The trading that I do on a weekly basis. Okay, all my trades are done on Monday, and then I like to, doesn't mean I always am, I like to be out by Friday afternoon or Saturday morning. That's what I would like. Now, Monday morning to Friday afternoon is the maximum amount of time you're going to get exposure to the stock market during the week. Monday to Friday, it is what it is. 9 to 4:30. That's it. Oh, sorry, 9:30 to 4. 9:30 to 4. So why Mondays? It's the maximum amount of time. 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. Rico! Oh, it's gone, man. They gotta like it last a little bit longer. So I can dance around on that silly thing. 5 days. When Monday is gone, okay, which is today's Tuesday, so we now have just lost 20% of the time value. Because there's only 5 days in the week, each day is worth 20%. 20, 40, 60, 80, 100. That's 100% of the working week. Okay, you can't get any more than 100% of the working week. So when Monday's gone, that's 20% out of the way. Well, Tuesday's gone now. Now we just lost 40% of the possible time value we had for this week. Bitch, moan, complain all you want. Tick tock, tick tock. Ain't no way you're going to stop the clock. So Monday, so Wednesday, I have 60% of time value. Not 100% of time value, 60% of time value. And then on Thursday, I only have 40%. And on Friday, it's 20%. So as the sands flow through the hourglass, so do the days of our lives. Some of you might know that one. Some of you probably don't. But what I'm saying is, the clock is continually ticking, whether you like it or not. Friday is coming. Okay? Retirement is coming. So you guys in your 20s and 30s and 40s, hey, great, wonderful. You got a longer time frame. But you guys in your 40s, 50s, and early 60s, your time is ticking away. Your time is running out. Okay? You're going to get to the finish line. You're going to get to the, it's like Monopoly. Go around, go, collect your $200. You're going to get to the go, and your boss is going to say, no, you're too old. You need to stay home. And whatever you have accumulated to that moment, you got to make that work for you for the rest of your life. That's just the way it is. So for you younger folks, Get there as soon as you can. Enjoy life as soon as you can. Working 40, 50, 60, 80 hours a week, there's just no fun in that. Where's the fun and excitement? All right, so what do we have next? Alrighty. What do we have over here? Vonnie. Yosef. What's happening, Yosef? Uh-oh. All right, right there. Wow. Delu Glory. Okay, Bonnie, Ford has increased. Yes, it has. Do you ever buy calls, 1 or 2 positions above what you... Okay, Alex, I don't buy calls at all. I don't. I'm strictly a seller. Okay, I don't buy them because 80% of all options expire worthless. So why do I want to be a buyer? Scale of 1 to 10. How worried about the AI bubble? 0. I'm not worried at all. Because, see, the stocks that I invest in, right? Stocks I invest in are 50 to 100 years old. Okay, AI wasn't around 50 years ago. So very rarely will I invest in a company that's less than 20 years old. Because that's not what I'm looking for. I'm looking for safety, predictability, okay, and profitability is what I'm looking for. Okay, the AI stocks, they may be hot and on fire now. Well, I'm sorry, but I'm at that point where I'm okay stepping aside and letting the young bucks play the game. It's just a part of life. You know what I mean? So yeah, I retired 2 years ago because I'm doing the younger generation a favor. I'll step back. You guys go ahead. You guys do all the work, and I'll just supervise. I'm okay with that. So let's keep on going. Wealth now wants to take a look at Honeywell. All right, let's get rid of this. Let's get rid of that, and let's put in Honeywell. HON. Interesting. Look at the glasses so I can see. Getting old ain't as fun as it used to be. I didn't need glasses years ago. All right. Honeywell, first thing, anytime I look at any stock, I'm looking at the exact same thing. A, B, C, 1, 2, 3. 3 to 4 seconds. The high, the low, where was it? Where is it? Up, down. What's going on here? That's what I want to see. Well, yeah. Now I want to go take a look at the numbers. Do the numbers work? What am I buying it for? 210.50. 210's going for 190. No, not this week. Now here's the thing. Someone just mentioned this not even 2 minutes ago. All right. Why about Mondays? Because you get the most time value on Mondays. See, if I buy this one here, 3 October, it means I got 3 days left. See that little tiny 3 right there? Now, for those of you that are new, have never been here before, and you're having a difficult time seeing these little tiny numbers that I'm pointing at, well, this screen here, is live on YouTube. Okay, at this moment in time, it is 9:43 p.m., 9/30/2025, the last day of the 3rd quarter. Well, that's today. So tomorrow, this will be a recording. It's being recorded now. Okay, anyway, besides the point. That's what I was getting at. For this week, there's only 3 days left. So I'm not getting a full 1%. Where is it? 210. 210's right here. 190. I'm not getting a full 1% because there's only 3 days left. So let's look at next week. Because next week, we now have 10 days until expiration. And that is the 10th of October. Well, that works. What am I getting? 210 is paying 370. Now that's more than 1.5%. Well, if I can't do this week's and make a decent profit, well then I'll do next week's and make a decent profit. So before we do that, let's take a look at all the numbers on the chart to see if it's right. Goodness. You see why I drink this stuff? It's supposed to be good for my throat. I'm not used to talking so much. A lot of you are probably out there thinking, yeah, right, he doesn't stop talking. Not so. I was very shy in my younger days. But there's a saying that life begins at the edge of your comfort zone. So years ago, I wasn't a big talker. Just like everybody else, a fear of speaking in public. I still have that. But nowadays, I just say, you know what the hell with that? I'm too old to care what people think, and I just get up and I just speak my mind. Now my voice, I'm not used to talking so much, so I'm trying to drink this stuff to make my throat better. All right. So let's break it down. I want to look at just this area here, because that's the important part. Now, the 1 year chart gives me an idea of what's the flow. What is it doing? Down, up, down, up, down, up, down, up, down, up, down, up, down. Now it's going back up again. Top is here, came down, here's the bottom, now she's going back up. It's easy to see. So this gives me an idea of where it's going next. This just gives me an idea where's the high of the year, where's the low of the year, and what are the investors thinking. Well, the investors are thinking it's not worth more than 240 because twice it wouldn't get over 240. And look, here it wouldn't do it either. Wouldn't do it there, and it wouldn't do it there. And then the bottom of the year, well, we can't really count that. That's that TDS day, that Trump derangement syndrome. Idiot says something stupid, people panic, and it just drops like a rock. We can't really count that. That's like, remember in 2021, you can't count this first and second, the second and third week of March. Because the second and third week of March, back in 2021, everything dropped. The same thing here. This is a stupid anomaly because people panic. Tariff. Oh, boom, yeah, right. Anyway, don't panic. Never sell just because some bonehead said something stupid. I probably shouldn't be saying that, but hey, it's just my opinion. And isn't that the freedom of speech? I say what I want, as long as I'm not really bad at it. All right, so let's look at the last 30 days, because the last 30 days is going to give us a really good idea of where do we think it's going next. Because the way this is the way I play in my sandbox, okay? 30-day high. Now the reason it's a 30-day high is because we, the buyers, don't think it's worth any more. Think about it. We, me and you, create all this crap. We decide what's too high. We decide what's too low. Because we're all here looking for the same thing. They were all looking to make a profit. Now we all have different dreams, different ideas, different risk factors, different positions. We're starting at this point in our lives rather than this point, and this is how much we're all different. But we all have the same goal in mind, to make a safe profit. Well, what does that mean to you? That's part where we differ. Okay, for me, 1% every week, well, hey, that takes care of my bills. As a matter of fact, I could probably get by on 0.5%. I could probably live comfortably on 0.5% per week. Well, that's 25% per year. I might have to do some scrimping here and there, but 25% per year, I'm pretty much okay with that. But I prefer 1% a week. That's 50% per year, because it makes it easier for me to do the math calculations. Anyway. Also, it's been effective for the last 15 years, so why change? So here we go. 30-day high, 30-day bottom. Now we got 2 days to the upside. 1, 2. So she's going up. That's what it looks like. It definitely hit the bottom right there. Now she's going up 210. The 210s are paying 190 for this week. It's only 3 days. But next week, 210s are going for 370. So let's do Honeywell next week's 210s and see what that looks like. And then you can ask yourself those questions. Do I like Honeywell? Does this make sense? Let's get rid of this. Let's do covered call. Next week's 210s. Right there. One contract at the market. And here's Johnny. Buy one, covered call, Honeywell, 10 October. 10 October. That's not this Friday, that's next Friday. The 210 call option, that's what I'm selling it for. I'm selling it for 210, but look at what I'm buying it for. 210.50. So I'm buying it for 210.50, and I'm selling it for 210, and I'm walking away with $335 per contract. Well, what is that contract costing me? Well, get my calculator. Okay, 335 is the profit. Okay, do you see that right here? Max profit, 335. Now remember at the beginning I said I'm looking for a simple covered calls, very simple trade. Safe, it is so safe they say you can do it in your government IRA. Potent, I didn't know. Seriously though, it is so safe that you're allowed to do this trade, this type of a trade in your IRA. No, there are a lot of trading strategies you cannot do in your IRA, but this one you can. Not that I'm trying to sell you anything. Isn't that weird? I'm showing you something, but I'm not trying to sell you anything. But hey, if you act now, you can get two for the price of one. Yeah. All right. Anyway. So my maximum profit right there, 335. Remember when I said simple, safe, predictable? I know what I'm making before I even do it. That's predictable. I know what I'm doing before I do it. Okay, simple, safe, predictable, consistent. Okay, this week, next week, the week after, the week after, the week after. I can do this every single week. I like to look at it as not buying stock or investing in a company. I like to look at it as if, ready for this? I am creating a weekly cash producing asset. Think about it. If you're going to buy something that's going to make you money every single week, what would it look like? Now, some people, they take hundreds of thousands of dollars and buy the house next door, the house across the street, and then they rent it out. Well, that's great. That is monthly producing revenue. But what percentage and how much work do you have to put into it? So the way I look at it, if you compare it to like a vending machine, candy machine, gumball machine. Remember that? Thanks for the gumball, Mickey. It was a big thing back in the 60s and 70s. A little tiny gumball machine with the Mickey Mouse ears. You put a penny in it. You go, thanks for the gumball, Mickey. Same thing. I'm buying a cash-producing, a weekly cash-producing asset. So this gives me money every single week until it hits my target. That's a good one. Until it hits my target. What's my target? My target is 210. What's it at now? 210.50. So does it have to go up? No. It doesn't have to do anything. It's got to stay where it is. You can even come down a little bit. Stocks only go three ways. Up, well, great, I'm good. Say the exact same, great, I'm good. Down, well, if she goes down below 210, well, then I'll reevaluate it throughout the week. Because I look at it every single day. Think about it. If you have a cat or a dog, don't you feed it for a walk every single day? What about a fish or a bird? Or how about a rose bush? Daisies, dandelions, pansies, whatever you like. Don't you have to take care of it almost every day? Well, then why don't you do that with your money? We are the only species on this little rock floating around in space that's got to pay to live here. Okay, cats and dogs, they don't have to pay to live here. Monkeys, chimpanzees, fish, birds, they don't have to pay to live here. We, humans, we got to pay to live here. And to the degree in which you want to live, how do you want to live? Do you want to live on the beach? You want a vacation everywhere? You want to just chill in the woods in a tent? Hey, it's your life, do what you want. But it comes at a cost. So you trade your time for money until you get to a point where your money can make money and you don't need to work anymore. I hope you all get there. Okay, it's an awesome feeling. Granted, it doesn't change your life. It just gives you one thing to worry about. Well, money, it might be one thing it might worry about, but it's a huge difference when money is no longer an issue on anything that you do. It's a freeing. It's like a huge weight off your shoulder. Don't get me wrong. I got other issues. I got children. I got ex-wife. I got one ex-wife. And I got my aging mother. So on. Anyway, so maximum profit 335. Oh, I'm blabbering on too much. Sorry about that. To find out the rate of return, you take the profit divided by cost of trade, including commissions and fees. It's just like that house. You pay $500,000 for that house, and you're bringing in $2,500 a month. Cash flow. Well, what is that at the end of the year? What rate of return is that? Well, take your profit, you divide it by the investment, that gives you your rate of return. I'm looking for 1% per week. Well, what is this going to give me for a week and a half? 335. The investment is 20,665 comes to a grand total of 1.6%. Well, that averages about 1% a week. That's like, 0.6 for this week and 1% for next week. Fine, I'm okay with it. 1% every week comes to over 50% per year. Now, it's probably going to be a little bit of a challenge just getting started, but it's kind of like riding a bike or driving a car. Okay? First time you're on a bike, you need someone to hold you up, to help you out, and once you got it, you got it. Driving a car, exact same thing. 14, 15 years old, mommy, can I drive? And they let you drive around the driveway. And then they let you pull, up to the street. And then you go about up the street and then down the street. And then it was up the street, down the street, up the street, down the street, until you got the hang of, the brakes, the steering, the gas, all that kind of nice stuff. It's a slow progression. You don't just go from 15-year-old, never touching a car before, you just jump on in and go. No, it doesn't work that way. You got to work at it. This is the same thing. You're learning a new language. You're learning new, it's a new habit. Look at it that way. It's a new habit. So 1.62% for Honeywell. And then you get that nagging question in the back of your head. Do I like Honeywell? Is this a good, safe place for me to invest my money? Those questions you should be asking yourself. Clay's got it. Way to go, Clay. Kevstar. Hey, James. I have both Siri and Target. Well, Kevstar, let's take a gander at it. Rico Robinson. Thank you for that, Rico. What are we doing? What are we doing? Okay, right there and right here. So, Kevstar wants to take a look at Siri. I do have some Siri. S-I-R-I. Okay, 3 to 4 seconds. What do you think? High, low. Where was it? Where is it? Up, down. Oh, look at this. She hits the top here, drops to the bottom. Now she's shooting up. Ooh, I like that. Now, all this is telling me is what are the investors thinking? Okay, I buy, get my profit. I buy, get my profits. I buy, get my profits. I buy, get my profits. Okay, same thing. That's what it's doing. Just like every other stock. Okay, look at the time frames. Okay, couple months. Okay, look for patterns. It's not that difficult. The last 30 days. Come on. That is so easy to see. High, low. Where was it? Where is it? Up, down, up. 1, 2, 3. There you go. Bottom, 3 days to the upside. Do you like Siri? That's the big question. Do I like Siri? Does it make sense? Well, just take a look. 23, 27, that would be the 2350s, and this week it's only 18. Next week it's 39. Okay, so 3 days, not enough time value, but 10 days, well, there's plenty of time value. I can even do the 2350s. Oh, no, the 23s. Get 45 there and get 65 there. It's always going to be a math problem. How much am I putting up? What kind of return am I getting? How safe do I think it is? Now, Siri might not be 20 years old. It might not have 20 years of increased dividends. But ask yourself the question, do I like the company enough to put my own money on the line to invest in it? He also said he had, what else did he have? Target. Now, I was telling people last night, I stay away from Target during earnings reports. See the size of that gap? That is a huge drop. They call it a black swan because it doesn't happen that often. But for Target, it usually happens right around earnings and dividends. Okay, I've seen Target at least 6 times in the last 2 or 3 years have a black swan. All for 5 little words. We didn't hit our target. That's it. Because the market maker, he's the one who decides what the opening price of the day should be. So for this right here, to go from 155 down to 125, that's a $30 drop. Because the market maker said, well, if they didn't hit their earnings, well, maybe I should drop the price. Well, he did, and look at this. This blue down here, that's the average volume. Average volume. You know, day after day after day, business as usual. He gets, see this one right here? Look at that volume. That's like 10 to 20 times the amount of normal volume. Well, because the market maker says, you know what? I'm going to take this little tidbit of information, and I'm going to exploit it. We did it last night. If you're interested, take a look. It's really kind of enlightening. It really kind of sucks, too. 24 fan in the fan club. Hey, Rico's number 24 fan in the fan club. I didn't even know I had one of those. Oh, empty pockets. Oh, empty pockets. That's funny. PFE. Frencho wants to take a look at Pfizer. Oh, wait a second. We're not done with Target yet. Let me finish with Target. Oh, big brain, you bought E and B, didn't you? Hell no. See, big brain, you can ask me every single day. Okay, Haas is very hostile here. Hostile Haas. There you go, hostile Haas. Dude, answer the question. Now, see, Haas, don't take this the wrong way, okay? But Haas, I'm streaming on 9 different channels, which means I have a whole bunch of different screens, which a whole bunch of different people asking me a whole bunch of different questions. So I'm sorry if you feel like I'm neglecting you and not getting to your question as soon as you throw it up there. But you got to remember, there are other people here too that just so happen to ask the question before you did. So, to answer your question, will you ever sell a put contract to get assigned the stock? Yep. There's your answer. I like how that sounds. All right, Troll. All right, what else do we have? Mindset Shifter. Honeywell. Okay, mindset shifter, I'm just pointing out the obvious. Okay, somebody asked me about a stock, I stick it up there and I go through the numbers. It's not a tip, it's not advice, it's just a personal observation. Okay, so the next one we're looking at now is Target. It's not a tip, it's not advice, it's just me observing what the numbers look like. Okay, Target, right now it's 89.70. A year ago we're here, and the bottom is right here. Okay, you cannot get any lower than the bottom, and that was just a couple of days ago. So where were we? Okay, 160, we drop, back up, back down, now she's going back up again. I like looking at the last 30 days because that gives me an idea of where does it look like it's going next. And can I take advantage of it? Is it financially feasible? So last 30 days, right there. Okay, so this is what Target looks like at this moment. 30 days ago, there's your 30-day high, 95. Then she drops all the way down here to 86. 95 to 86, that's $9. That's a 10% drop between here and here. Well, now, here's the bottom. Now we're slowly going up. From 86 to 90, it's only $4, which is not even 4 or 5% yet. That's it. Hey, 10% drop, 4% increase. That's where we are at the moment. But we have how many days? 1, 2, 3, 4, 5, 6. 6 days to the upside. Does that make sense for Target? Well, let's take a look. 92. Let's get rid of this. Okay, let's change this to covered stock. Let's look at the 92. No. 89. All right here. See it? 89.70. We'll be looking at the 90s, which is right here. Okay, so the 90s. Sorry. 90, right there. One contract. It's going to be a little... All right, let's find out. We'll find out. Market, here we go. Here it is right there. Buy one, covered call target. 10 October. That's not this Friday, it's next Friday. Can I get a little bit more time? The $90 call option. Target at the market. 236 is the profit. 8,700 is the investment. So I wouldn't mind getting 250 or 230 bucks every 7 days for one position. Think about it. One position. Tie up 8 grand, 9 grand. Okay, 8,700. It gives me $236 every single week. Week after week after week after week after week. Why not? It just makes sense for me. So let's find out what the numbers are. Calculator, 236 is the profit. The investment, 8,764 for one contract. It's 2.69%. Now, if 1% a week is 50% a year, 2% a week, well, that's got to be over 100% a year. Well, I like that one. And yes, target's already written down. I wrote it down yesterday because it looked good yesterday also. Let's get rid of that. Let's get rid of this. Let's go back to here, and let's go back to here, and let's find something else. La 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 la. Leah! Good evening, Miss Leah. You want to take a look at ES. Now, Miss Leah, I'm going to be honest with you. I've never heard of ES before. So I have no idea what we're looking at. We're looking at a no for 2 reasons. Okay? Number one, it's at the high of the year. I don't ever buy anything at the high, because to me that's a time to sell, not a time to buy. And second reason, October, November, January, April, these are months of the year, which means I can only trade it once a month. That's an automatic no. Hossy takes one screen at a time for questions. Thank you, Nico. Thank you, Mr. Nico. Big Brain, you bought E&B. Big Brain, I have to commend you. I really do. Because you are consistent. Okay? You like E&B, not a problem. You enjoy it. It's a no for me. Okay? E&B doesn't have what I'm looking for, so I don't care if it's booming. Really, honestly, I don't. See, I'm past the point where I'm chasing the shiny objects. Okay, no dividends, no thank you. No weekly options, no thank you. It's actually that simple. Okay, so if I can spend 5 or 10 minutes a day and make my 50% per year just on 5 minutes a day, why would I want to add more work for me? Okay, been one hell of a year. Alrighty. All right, Big Brain, you asked for it. Let's do this. You ready? Let's go back to the very beginning of the year. Okay, a year ago. Okay, Big Brain, 1 year ago. 1 year. Right now, it's at the high. Okay, so a year ago, we're at $40.61. Okay, now, just for the fun of it, what we're going to do is we're going to take $40.61. That's it. $40.61, because that's one contract. And then we're going to take that and we're going to multiply it by 1% every single week for 52 weeks. Now, 40.61. 52 weeks later, it's at 50.46. Now the difference between 40 and 50 is 10%. Sorry, it's $10. Okay? So from the bottom to the top, is it only a 25% increase? So this thing went up 25% in 1 year. You following me so far? Okay, so let's go to my website, which has what I like to call interest calculator, a weekly compound interest calculator. Weekly compound interest calculator. Okay, here we go. Okay, Big Brain, you ready for this? All right. We're going to start out with $40.61. Okay, so we're going to put in $40.61. Okay, $40.61. That's what we're starting with. Okay, we're going to put 0, so we're not going to add anything to it. We're just going to leave it at 0. So we're not going to add anything. Okay, let's get rid of that. Okay, and the interest rate, we're going to do 1% a week, because that's what I'm teaching, 1% a week. Okay, and we want to do this just for 1 year. Okay, compute savings just for 1 year using the numbers that you are so happy with. Okay, 1 year ago, $40.61. Now it's up 25% for 1 year. And you think it's the bee's knees. Well, let me show you what 1% compounded weekly should look like. Okay, 1 year. Okay, so here's your 4161. Okay, that's the total amount invested, 4161. Total interest earned, 2752. The ending number, 6813. So let's divide that up a little bit, in case you missed it. All right. So 4061 is what Enbridge was a year ago. Compounded 1% every single week, you should have made. It should be $68, but no, it's at 50. Okay, so I made. If I did this way, I would have made twice as much as you made. Do you see how the numbers are going against you? You thought Enbridge was great. Okay, but it only went up 25%. Well, 1% a week, 4161. At the end of the year, 52 weeks, would be 6813, not 50. See, you're at 50. A year ago, 4021. Now you're at 50. Well, great. Had I done it, 4021, 4061, 68. That's almost twice as much as what you made. So although you like it and you're wonderful about, explaining to me every week or every couple of days, because you say the same thing day after day after day, but you're missing something very important. Okay? You think that 25% is a good rate of return. Okay? Here's where it was a year ago, 41. Now it's at 50. That's only $10. Doing it your way, you made $10, 25%. Doing it my way, you would have made $27, which is more than 25%. It's closer to 50%. So you keep doing Enbridge the way you want, because like I said, you like what you're doing, you keep doing it. All right? Me, I'll stick to what I'm doing. Furchill wants to take a look at Pfizer, PFE. Interesting. Now, I'm going to say no to Pfizer. I'm not even going to bother looking at it for one reason only. Do you see what happened today? Goes from here, makes that huge jump. That's a huge jump. Look at the movement. Yeah, more than likely there's going to be a pullback on that. That's not a normal day. So it's hard to factor in a strategy that relies on, consistency and predictability when you have something that is not normal pop up. So most likely there'll be profits tomorrow. Been one hell of a year. Yep, big brain it has. Paul, Black Talking, Jake, Olivia, how are you today? Frencho, we looked at that one. Ozarks Rambler, how are you today? Mr. AJ, I bought Pfizer 25 calls today. Okay. Interesting. Le silence. Cincinnati wants to take a look at Kroger. Interesting. Ooh. High. Low. Where was it? Where is it? Up, down, up. Right there. High's here. Now she dropped. Now she turned around. Looks like a perfect opportunity if you like Kroger. Well, let's take a gander. The bottom of the year was a year ago, 54.79. Top of the year was a couple of weeks ago, 74.90. Well, from the top of the year, 74.90, she drops to the bottom, right on 64, and then she pumps up to 67. Well, that's easy to see. Look at the last 30 days, showing almost the exact same thing. 30-day high, a 30-day bottom. Now she's going up. 67. The 67 is going for 85 here, but it's going for 123 there. Well, you got to remember, today's Tuesday, so tomorrow's Wednesday. You only get 3 days left in the week. So 3 days is not going to give you, 3 days, it's not going to give you a full 1%. So it might be wise to look at next week, or you could just capture this right here. Like 3/4%, and use that. Then maybe do it next week. Schwab, U.S. large caps. Exactly, why not? Pfizer did a deal with Trump. Oh, not quite sure what that is. But even whether or not he did or not, it's really irrelevant. Okay, yeah, it dumped up. Okay, is it going to keep going up, or are people going to take profits? Felix, that's what you can keep in mind. Because you got to remember, okay, we're here to make profits. Okay, it was here, shoots up, usually with a shoot up like that, it's usually profit taking. Okay, Pfizer in the news today will lower their prices to Medicare to avoid tariffs. Well, that sounds like a great idea. What's wrong with that? All right. Sorry, how do you determine the 1%? Oh, Fab, 1%. Okay, Fab, are you ready? Jamil, explain to me, like I'm 9, how do options and calls work? Okay, Jamil, hold on a second. Okay, Fab, take a look at this. You ready? The current stock price is $25.48. So, what is 1% of $25? It's not a trick question. 1% of $25 is 25 cents. You take the decimal point and you move it over 2 places. That's it. Okay, 1% of 25 is 25. Isn't that weird? 1% of $25 is 25 cents. Kilroy, let's go. Happy to see you, man. You are a real one. Thank you. Yeah, I am the real one. There's like 35 people pretending to be me. Ooh, before I go, let me just tell you this. Okay? Now, I appreciate all you coming here. Every night, anywhere between 5 and 30,000 people will come through these 9 different channels. Okay? You will be, not you might, you will be approached by someone saying that it's me. Either through email, a text, WhatsApp, Snapchat, Telegram, Instagram, Western Union, whatever. You will be. I'm going to tell you right now, it's not me. I don't do that. If you want to have a conversation with me, whatever channel you on, you can go to my website and schedule a one-to-one phone call with me. No charge, and I can guarantee you I'm not going to try to sell you anything. You can check a look at all my videos. Very, very rarely do I try to sell something, and it's usually because somebody asks. If somebody asks me something, I'll say, yeah, okay, this is what it is. But I'm not trying to sell anything. I'm just sharing information. Ooh, I get roses. Yay, PP, woohoo. So, yeah. Just want to let you know, you will be contacted by someone, and more than likely, it ain't going to be me. Dawn! Thank you, Dawn. All right. So that's my opinion on Pfizer. If you like it, great. Not a problem. But always keep in mind, with a big jump like that, with a big jump like that, statistically, there's usually profit taking coming right after it. You told me earlier. Don, I'm not quite sure what you told me earlier. And that is premium. You're looking for, let's go, happy seaman, blah, blah, blah. Do you do option trades? Yes, I do. Okay, so Jamil wanted me to explain to him how options and calls work. Okay, so Jamil, it's 2 separate things. A call is a call option. A put is a put option. 2 totally separate things. Okay? So think of it this way. If you want to call up someone, yeah, or you want to put them down. So you either call up, say, hey, let me call up Jim. Here we go. Or hey, I'm going to put you down. Put is when you want to stock down. Calls when you want the stocks to go up. Kind of simple. That's the simple part about it. But how we use them here, okay? The way we use them here, I was like, all right, here, check this out. Ready? It's a cup. I'm going to sell this cup for $10. That's what I want. I want $10 for this cup. Now, Jamil, I say it's worth $10, and you think to yourself, you know what? It could be worth $10. Let me give you 10 cents, because that's 1%. Let me give you 10 cents. Hold it for me till Friday, and I'll decide whether or not I want to come pick it up on Friday. Well, that 10 cents you give me, that 1%, that premium, okay, that premium right over here, is just to hold your place in line. You're the first person who gets a chance to buy this at $10. So let's say Friday comes and you buy it. Okay, well, you give me the $10, I give you the cup. Great. Well, what did I get? I got $10 for the cup, and I got that 1% that you paid me for me to hold it for you. All right, let's put it this way. Let's say it's worth $10. You give me 1%. I hold it for you till Friday, and then you decide on Friday you don't want it. Well, great. Well, then Fabio, he's going to give me 1% on Monday. Then he has the right to buy it from me at $10 between Monday and Friday. Now, if he buys it, great. I get my $10 for the cup. I get 1% from him. I got 1% from you. Well, let's say he doesn't buy it. Okay. Well, then now I take it and I sell it to Sally. Sally says, you know what? Let me give you 1%. I'll come back on Friday, and I might buy it from you then. So if she comes back on Friday and she doesn't buy it, well, I got 1% from you. I got 1% from Fabio, and I got 1%. So I can get 1% every single week until somebody finally buys it. That's it. So if I pay $10 for it, and I sell it to you for $10, and you pay me 1%, well, I just made 1% off of the $10. That's all I'm looking to do. Okay, see, I'm looking at stocks to buy as they're going up from the bottom. Okay, so you get 30-day high. It's just a point where people don't want to buy it anymore because they think it's too high. And that's us. We say, oh, it's way too high. I'm not buying that. That's the high. And then people start taking profits, and the stock drops. And then it drops and drops and drops until it gets to the bottom, right there. And then when it gets to the bottom, people look and say, holy cow. Pfizer at 23? Yeah, that's cheap. I'm going to buy it. So people buy it. And then Bonehead comes on and say, hey, let's make a deal. And all of a sudden, boom. Yeah. It changes every day. We need to know and keep in mind, what did we buy it for? What did we sell? What does it mean? And how do I get my 1% every single week? It's Ghoul. It's only me, not anymore. Okay, I'm not quite sure what that means, but hey, alrighty. Do you do option trades? Yes, I do. So Jamil, I think I explained that well enough. Holy cow, 300 people here. And that is the premium you are looking for. Absolutely. That is the premium right here. If I'm buying it at this price, I'm selling it at this price, this is a premium I want to walk away with. And if that's more than 1% every week, well, that's over 50% per year. Okay? It's cool. How you doing? Don't get me wrong here, brother. Okay? I got 9 other channels. So you're on camera number 5? Yeah, so you're on channel 5. I remember years ago, there's like 3 channels. ABC, NBC, CBS, and then every once in a while we get PBS. And then channel 38, that was WBZ. Okay, so growing up in the 60s and 70s, we had 3, 4 channels. That's it. You told me earlier. Okay. Bitcoin 777, how are you today? Uh-oh. All right. Swifty Beats, back again. I've seen you before. Paul, how are you doing? Oh, Paul wants to take a look at TSLL. TSLL. Interesting. Let's take a gander. The high was at 41. The bottom, 7. Can you imagine that? 41 all the way down to 7? Think about it. 41 all the way down to 7. Could you do that? Seriously. Could you buy something at 41? And then when she hits 7, not sell it. And keep writing covered calls on it. Get it cash flow every single week. So remember rule 1, never buy something you don't want to hold on to long term. So whether or not it makes sense to you to buy it here, because let's look at what we were looking at back then. Okay, that's what we were looking at. Hey, here's the bottom right here, and it shoots up. Well, that looks good until it gets to the top. And then what happens when it gets to the top? Starts to drop. Because that's what stocks do. They go up, they go down, they go up, they go down. But it didn't drop right away. Look at this. Down, and then it went up. It went down, 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 then it went up. Because that's what they do. So if you're going to invest your hard-earned money into a company, well, don't you think you should look at it every day? It's just a thought. I look at mine twice a day, just to make sure. Because I'm retired and I don't want to have to go back to work. I'm going to let you guys do that. Okay, I've been working since '73. Okay, that's a long time. From '73 to 2023, that's 50 years. Holy cow. Okay, so I worked 50 years. And I said, you know what, I'm done. Okay. No to TSL. I don't buy it high. That's where it's at the moment. Sorry. Now, don't get me wrong. I do have some. And I'm getting rid of mine this week because I bought mine down around here. Now it jumped up, and it just doesn't make sense to hold it anymore because trying to roll it forward again, the market maker's not offering me more than 1% to hold on to it. So if the market maker's not going to pay me to hold on to it, I might as well just let it go, wait for it to drop again, because that's what they do. Okay, she shoots up. She goes from, where is it, from 12 to 22? 12 to 22 is $10. That's like a 90% increase from here to here. So yeah, it's getting ready for a pullback, correction, profit, whatever you want to call it. It looks eventually it's going to come back down again. Next. Okay, Paul, Ripple. I don't do Ripple. SoFi. I don't think SoFi fits. What do you think? Here's your bottom. It shoots up. That's a week and a half coming down. You may like SoFi, but for me, it's not time to buy. It's time to sit, watch, and wait for this thing to keep coming down before it gets to an area and turns around again. It's in a free fall. Why the hell would I want to buy it now? Don't get me wrong. If you like it, great. Keep your eye on it. When it hits a point where you say, hey, this is where I want to jump in. Okay, Alex, do you ever buy calls? Well, I already talked about that one. Scale of 1 to 10, we did that one. Did Honeywell already. He uses dividends as an indicator on which companies thinks you should tinker with. That's one way of looking at it. Have we gone over American Express? Oh, I haven't done the American Express in a long time. I'm going to say, I'm going to say no. Okay, only reason, here's your top here, 350. Well, now we're at 330. That's not that big of a drop. This thing's got a lot further to go back down before it looks appealing to me. If you like it, hey, you have more power to you. Thoughts on using Monte Carlo simulation? I got to think about that one. I have no idea what the Monte Carlo simulation is. Sorry, dude. I don't think I'm that sophisticated. What is the Monte Carlo? What did he call it? Monte Carlo situation. What is your website? The 10-Minute Trader. Okay. There's a link right in the bio. Okay, you're on TikTok. Right in the bio, there's a link to the website, The 10-Minute Trader. All right, so let's keep on going. What do we have next? Next. Okay, Buns, Kuramus, #1 homie. Wouldn't they be less profitable? I'm not 100% sure which one you're talking about because I'm looking at your, what do you call it? Oh, ULTY. Okay. I have multiple. I have 2 accounts, Chris. What are we looking at? This isn't his actual account. This is a fake account. I like it when people say that. Here I am live on this account, and he thinks it's a fake account. Okay, that's fine. Brulio, how are you doing, Brulio? Chris, D-Nut. Isn't that Krispy Kreme? D-Nut. D-Nut. It is. It's Krispy Kreme. Okay, same thing. See where the high is of the year? See where the bottom is of the year? Well, what's she doing? Well, basically, she's just going sideways lately. Not really doing a whole heck of a lot of anything. Look at that resistance. Okay, once, twice, 3 times, it wouldn't go over $4. So it's trying to go over $4 again. Well, it didn't do it the last 3 times it tried. What makes you think it's going to do it this time? Hey, low there. 330. Okay. Oh shit! Thanks, Jordan. That's funny. Bro, no, it's not. He is streaming multiple accounts. Yeah, thank you, Nico. Yeah, I get. It is fake. Brulio, his actual account is Dividend Stock Talk. Okay, Brulio, I thank you for your, the strength of your conviction. But no, the other guys are right. I do have 2 TikTok accounts. One is the 10-minute trader, which is what you're on. The other one is Dividend Stock Talk, brought to you by the 10-minute trader. So every video you ever hear me do is, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, where I invest in dividend stocks for a wee. Oh, yeah, okay, anyway. Ripple, no, I don't do Ripple, sorry. Have you heard of IONQ? Bitcoin scammer. IONQ. Yep. And it's a no for this week. Reason being, take a look at this. Look at that shot. 35 to 75. That's a $40 increase. That's a 110% increase in 30 days. Okay, now it's dropping like a rock. Hell no. Why would I want to jump into that? Look at it. 35 jumps up to 75. That's a $40 increase. Now it's dropping like a rock. So I'll wait for it. Okay, if I like IONQ, which I don't. But is what it is. I'll give you $5 for that cup. Hey, Felix. Running on coffee and Jesus. Okay. Actually, it's all gone. It's empty. I'm new here. Do you only consider profitable companies with a dividend yield, long or short? Ortega, how are you today? ¿Qué pasa, amigo? ¿Cómo está? Okay, the way I look at it. Uh-oh, where was I? Oh, I'm new here. There it is right there. Okay, so Ortega. What I'm doing specifically is looking at companies that are consistently profitable for at least 2 decades. That's 20 years or more. Well, for me, that makes sense because I'm retired. I don't have the luxury of being wrong. So if you're still working, your 20s, 30s, or 40s, or 50s, you can be wrong and you can make up for it. If you pick, right stocks and you're consistently being profitable and you consistently being on top of it. Okay, you can do that. However, at 61, I don't have the same amount of time that you do. Okay, I realize, 80, 90 is right around the corner for me. Maybe not so much for you, but does it make sense? Buying a good quality company, selling it for someone else in order to get a 1% consistently every single week. Now, 1% consistently every single week does come to over a 50% return per the year, if you're okay with that. Now, it's not going to be simple and easy. You actually have to do something. That's kind of like, hey, I want to have nice white teeth. Well, too bad. You got to brush them twice a day. Well, nobody told me that. Well, it is what it is. Okay? If you want to be physically fit and healthy, you got to work out. All right, there's certain things you got to do. So if you want your money to be safe and to continually grow, you got to do something. No one's going to do it for you. Okay, BP, we already looked at SoFi a little while ago. Mr. AJ, hey, I loaded up on non-PFE calls at 23, and Boneless makes a deal. Don't know what to tell you there, dude. Was that Michael or Michelle? Hey, boss, I purchased RR 100 stocks and then sold a covered call on it for $450. Am I doing it right? RR, I have no idea what RR is. What is RR? Oh, Rich Tech Robotics. You bought 100 shares and then sold a covered call on it for $450. Kind of makes sense. But I don't know what you paid for it, and I don't know which week you did. Did you do this week? Did you do next week? Did you do the week after? What's your rate of return? There's a lot of missing pieces to that equation. But you're kind of right on the same path. But me personally, I would have done RR because this thing was at 50 cents less than a year ago. So there's no possible way this thing has 20 years of profits behind him. But that's just my opinion. What the hell do I know? Brulio, no, it's not. Go to his other account. It is also live right now. Chris. He just said it. Yes. Yes, I did. I can't. I wish I could. Answer every single question as soon as they pop up, but I can't because I got 6 screens in front of me. I feel bad for the guys on these other 4 or 5 screens down below. I didn't even know any idea how to get a hold of those or what kind of questions they ask. Okay, other account, blah, blah, blah. Thank you, Nico. All right, Jordan, he's also live on YouTube. Yep, thank you, Nico. Always someone. I never fails. Always someone wanting to take a look at ULTY. ULTY. Okay, you like it. I'm going to say no. Now, the reason why, Vibello, I'm going to tell you why I don't like ULTY. And for that, we need to go over to Yahoo Finance. ULTY. Now, I want to take a look at some historical records on ULTY. More how often? We got 2 choices. Number 1, we can look at 20 years of earnings reports. 20 years of quarterly reports. 20 years of reports. Or we can go directly to the profits themselves. Well, dividend companies pay out a dividend. Now, a dividend is a small portion of profits. So as the more profitable, the dividend or the profit sharing section increases year after year. If a company's not more profitable than it was last year, the dividends will be going down because they're directly connected to each other. That's like that bones connect to the arm bone, connect to the elbow bone, the elbow bones connect to the shoulder bone, blah 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 blah, all that kind of stuff. It all goes together. As a company is more profitable year after year, the dividend they share with their shareholders, that's us, year after year. If the company's not profitable, well, those profits decrease and dividends decrease. So, that being said, let's see how wonderful ULTY is. Now, those who've been here before, it's not. Okay. The very first dividend ULTY paid March 14th, 2024. That was like 14 months ago. This thing's not even 2 years old. Not even 2 years old yet. But hey, it's your thing. You do what you want. Let me show you the profit of this company. You ready? very first dividend, $1.06. Okay, it's a starting point. All right. Second, 141. Well, that's a nice 35% increase. That's great. It went up. 106 to 141. That's up. 127. That's going backwards. Not profitable. Losing money. Yeah. Hold on. 141 to 127. That's backwards. 113. 27. That's backwards. That's down even further. 78. Even. That's further. It went down five. It went up once. It went down five times. How can you possibly say that's a good investment? It gets worse. 99, 78, 98. So it went from 78 to 98. Okay. Then it went from 98 to 82. That's backwards also. It goes from 82 to 83. It goes from 80 to 70. Then it goes to 57. Then it goes to 53. What the hell are you thinking? Seriously, do you even check the profitability of where you're putting your money? You're giving your money to a company 2 years old. They're consistently losing money, and you think it's a good thing. Someone's lying to you, brother. Numbers they're right here. Read them. These aren't my numbers. This is Yahoo. Go to whatever finance site you want. Take a look. Are they consistently profitable? Well, apparently not. The number keeps going down. So no. I told you someone's going to ask. Remember rule number 3? Make sure the company's consistently profitable. Well, he didn't check. Because no, it is not consistently profitable. But you can invest any way you want if you think it's good. There's nothing wrong with it. There's no right or wrong answers. If you like LTY, great, more power to you. I just don't like it. It's only 2 years, not even 2 years old. Okay, I'm 61. I'm going to be 62. I'm older than this company. Why would I put my money into a company younger than me that's not profitable? No. For me. That's just for me. You guys do whatever you want. Derek, LHM. What the hell is LHM? Derek, that's not a good sign. Derek, that's not a good sign. What the hell is that? LHM. Land Home Group. Okay. Derek, more than likely that's a Canadian company, but definitely not a U.S. company because it's not even showing up. All right. That being said, let's keep on keeping on. What do we have next? CEG. Metagirl wants to take a look at CEG. CEG, what the hell is that? Constellation Energy Group, CEG, 329. Interesting. Okay, here's the high, here's the low, here's where it was, here's where it is. Down, up, down, up, down, up. What's going on here? Let's zoom in a little bit closer to see what it looks like. Last 30 days. Right, down, up, down, up. Yeah, see, we bottomed out here, went up, pulled back down. It's like no rhyme or reason here. There's no clear path. And that happens every once in a while. Okay, you get your 30-day high here, 30-day bottom. She shoots up, now she's coming back down again. Simplified, that's what it looks like. But it's not a real clear picture. Because she dropped, and then she went up a little bit, but not really, because it's still coming down. I loaded up on PF. I already did that one. Hey, boss, I purchased that one already. Brandon, what's happening? Fab, do you liquidate your position at the end of each week to get into another favorable start? No. Nope. Okay, I just rolled it into the next week, or I let it go away. J. Deputier. I'm disabled. I need to make 50% in a year. Alrighty then. PK TSYY. What the hell is TSYY? TSYY. Granite shares. Hell no. Who came up with that one? PK? Take a look at this. Look at this thing. 26 drops all the way down to here, and it has no options. Sorry, no options, no thank you. Sherry Saeed wants to invite me to co-host. Sorry, kiddo, I have no idea who you are. Would you prefer them not to exercise the option? Wow, I can't get out of it. There we go. Would you prefer them not to exercise the option, hold the stock only once in a while? And Eska, it's always going to be a numbers game. What did I pay for it? What did I sell? What's that now? Where does it look like going? Am I getting 1% to hold on to it? If I'm not getting 1% to hold on to it for another week, well, it's going to be a no, just get rid of it. But it's always going to be dependent on what did I buy it for? What did I sell? Where's it at now? Where's it going? A lot of things, because it changes every single day. That way, when we buy on Monday, we look Tuesday, Wednesday, Thursday. And by Friday, we have a good idea of what we're doing to close out the week. Are we selling it? Are we letting it called away? Are we rolling it into the next week? What are we doing? We can't answer that question today on a Tuesday night. We have to wait until Friday to show up. Demorphic. And do you only count the 1% off just the premium, or do you include the stock increase in sale price? That's an excellent question. No, I only include the premium. Okay, because there's no guarantee the stock's going to go up. Because if let me get a halfway decent one. Ugh. Here we go. Let's take a look at this one. All right. What was the question again? Okay, 1%. All right, so here's the stock price right here, 89.70. The closest strike price to 89.70 is going to be 90. Well, the 90 for this week is going for 118. That's over 1%. Also, just like you said, the difference between 89.70 and 90 is an additional 30 cents. So you take that additional 30 cents, you add it into this 118. Now I'm walking away with $1.48 per share. So 100 shares, that's 148 bucks. 1,000 shares, that's 14,000, something like that. But it's always going to be a numbers game. And you're right. You can add this in, the difference between the purchase price and the strike price. Okay, but mainly what I'm looking for is this right here. Because if the stock doesn't go up, well, did I make my 1%? Because I'm not adding that 30 cents in there if it doesn't go up. What if it stays the same? Okay, well, I'm making my 1% here, so I'm not really worried about the difference between there and there. But if you like it, okay, if you like the company, why not? You know what I mean? Do you only do options? Trell, no. Okay, Trell Evans, I buy the stock, I sell the options. Okay, worst case scenario, all the stocks I buy have dividends which increase year after year after year. Davin, how are you doing? Rudy, Jackson Riley, Chris, how are you doing? Olivia, thank you. How are you doing? All right, what else do we have? Oh, Sam wants to take a look at Microsoft. Uh-oh. Uh-oh, where did it go? Where did it go? Where did it go? Anytime I touch this stupid thing, it just disappears. Oh, there's right there. So Sam, Microsoft, MSFT. Here we go. Okay, same thing. Microsoft, whatever. Here's the high, here's the low, here's where it was, here's where it is. Okay, down, up, down, up. Simple. It's in an upward trend. It's easy to see. Do you like Microsoft? That's a good question. Well, let's take a look at the numbers. Okay, here's your last 30 days. Okay, she drops, shoots up, pulls back. 1, 2, 3. 3 days to the upside. Okay, there's the top right there. Here's the bottom right there. And there's 3 right there. Does that make sense? Well, what's that number? What the hell is it? 517? Well, let's look at the 517.50s. Right here, 517.50. 430 right there, not quite enough. But next week, 517.50, 730. That's over 1.5% if I want to do it for next week. But if I show you that one, that one's going to hurt. You imagine that 100 shares at $500.17 per share. Was that 50 grand for one contract on Microsoft? Well, let's take a look at it. It's like I don't think I've shown you a high dollar one before. But look at the numbers, because the numbers don't change. 517.50. There it is, right there. One contract, just one. Now the dollars are going to be like, ouch! But the rate of return is like, oh, I could do that with a $20 stock, because you can. Right here it is, right here. Buy one covered call Microsoft. 10 October 25. That means this option expires next Friday. The 517.50. Well, it's at 517.95. Well, 517.50 at the market to open. The profit is $1,000 per contract. Well, that's nice. $1,000 per contract. But look at what one contract is costing you. 50 grand. Well, it's Microsoft. What did you think? So get the calculator out. So the profit is $1,007. The investment for 100 shares of Microsoft, $50,743. Gives me a total of, see that, 1.9%. It's bigger numbers, but the percentages are about the same. Now, some of you might be thinking, well, $50,000 for one contract might be a lot. Well, there are other people out in the audience that have millions of dollars. 50 grand, not a big deal. It's all relative. It's just a 5 with a bunch of zeros. That's all it is. 5 with a bunch of zeros. Anyway, 1.9% Microsoft. Let me write that one down. All right, that being said, what are we doing next? Ben wants to take a look at Eli Lilly. LLY, Eli Lilly. Oh, here we go. Same thing. Let's do the whole thing all over again. High, low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up, down, up. Oh, what's going on right there? Looks interesting. Let's zoom into it. Okay. 30-day high. 30-day bottom. 1, 2, 3. Now this right here kind of makes me not want to jump in. You know what else makes me not want to jump in? The fact that it is $763 per share. Now, we saw Microsoft $50,000 to do one contract at $500. Well, this was at $760. That's going to be $70,000 per share. And guess what? You're still going to walk away with 1 or 2%. So you want to do a $700 stock, $70,000 per contract, or do you want to do a $20 stock and still walk away with the same rate of return? Bigger numbers doesn't mean bigger returns. It just means bigger numbers. That's all it means. So 1% of a million is still 1%. It just happens to be $10,000. Well, 100,000, 1% is 1,000. It's still 1%. 1% return. So I'm looking for a 1% return. I don't stocks over $250, $300. Just doesn't make sense to me. Sorry. I was born in the suburbs, the rural suburbs of Boston. Okay? My mother said it was the greatest thing she ever did to move out of the city. Because I was born in Boston. Okay? All my brothers and sisters were born in Boston. It was in 1966 when my mother said, no. My sister came home with some kind of booze, got beat up by someone. My mom said, no, we're leaving. So she said the greatest thing she ever did was leave the city, go to the rural suburbs. And it was rural. There was like 3,000 people when we moved there. One traffic light in the whole town. Anyway, I don't do Eli Lilly. It's out of my price range. So however much money you think I have, you're probably wrong. I can't do 100 shares, 200 shares of $760 a share. Anyway, next. Hey, 86 is in the house. What stocks are you investing in long term? My idea of long term is 30 days. Just to give you an idea. Because you might think long term is years, decades. Me, long term is 30 days. Okay. You know a lot of seams. Cheddar bread. How are you today? Marvin, how you doing, Marvin? John Cooler wants to take a look at IBM. Now I have some IBM. Oh, look at that. It's coming down. Maybe. We'll see. All right, so IBM, same thing. High, low. Where was it? Where is it? Look at this. Up, down, up, down, up. Now she's coming back down again. Zoom into that right there. Okay. The top was Friday. Monday was lower. Today, I don't know. It kind of looks sideways to me. Kind of because the bottom is not as low, and the top is not as high as it was yesterday. So I do have some IBM. I got IBM at 285. I'm hoping it comes back down again. Anyway, let's keep on keeping on. Education, always the first step. Ooh, I'm going to agree with you there. Best dividend instrument is Bitcoin mining. Okay. I'm going to say no, only because it hasn't been around. And the reason why I say it hasn't been around, Bitcoin doesn't have anything behind it. There's no gold, no silver, no real estate. Okay? There's nothing solid behind it. You got a wink and a nod from some stranger on the other side. What the hell's happened to my voice? Holy shit. That was interesting. What the hell was that? I ran out of tea. That could be what it is. Hey, but wait, it gets worse. 86, that's funny. All right, where are we? David, how are you today? Escott, we already looked at Nike earlier. Double J, Verizon is a great dividend stock. Well, it is. Let's see what it looks like for this week. Okay, here we go. Verizon. The high, the low. Where was it? Where is? Look at this. Almost like sideways. Like a year ago, we're here, 45. Now we're at 44. Imagine holding on for a year to make $1. Can you imagine that? 45 a year ago. Now we're at 44. Okay, wait a second. You're losing $1. Okay. But look, down, buy, sell, buy, sell, buy, sell. Buy, sell. It's like buying and selling signals are all over the place. But if you just bought it and held on to it for a year, you lost $1 per share. Anyway, it does look interesting. Look at the last couple of weeks. All right. You get your top here, comes down, retrace, comes down. Now she's going back up again. Okay. The 44 is going for 24 for this week. Next week, no. So as much as it looks good, as much as you think it's lovely, this week, okay, the 44 is going for 24 cents. That's a little bit more than 0.5%. Now, if you're okay with 0.5% every week, that comes to around 25% per year. If you're okay with that. Okay, next week the 44s are going for 39. Not even 1% for a week and a half. Now, very rarely do I ever buy Verizon because the numbers, and they know it. Verizon knows we don't have to give big premiums. We're Verizon. That's what they're saying. We're Verizon. We don't need to give big premiums. Next, what do we have here? Great job. Live 90 minutes. Oh. Coromis. Wouldn't they be less profitable? Maybe. Mike Sweeney wants to take a look at 3M. Interesting. Okay. 155, the 155, 165, okay. 287, both look pretty good. So, let's take a deeper dive into 3M. A year ago, 3M is at 137.46. We bottomed out the year on the second week of April. We all know what that was. 121.88. And the top was a couple of months ago on the halfway through July, on the 18th, 164.28. That's the top. She drops back up, back down, back up. Classic movement. Look at it. Okay. Up, down. Up, down, up, down, up, down. Now she's going up at this moment in time. Here's your top right there. Here's your bottom. Now she's going up. Depending on how you look at it. Then you got to ask yourself the question, do I even like IBM? Oops. Do I even like 3M? The M was in there. IBM, 3M, same thing. So how's the last... It's getting late. Can't even get the words out right. So here's the 30-day bottom. Here's the 30-day top. Now she crashes again. We got 1, 2, 3. 3 days to the upside from this bottom here. 30-day top, new bottom. Now she's going back up again. Does it make sense? It's actually that easy. Does it make sense? 155.18. 155 is going for 287. That's more than 1%. Holy cow, we're past 11. All right, so that means it's that time of day for us to say good, have a nice evening. All right, so I'm going to sit down and go over some questions before we call it a day. All right? When could double down if it is the bottom, but I'm not sure yet? Dev. Got into Coles at 17, and it dropped to 15 this week. Oh, let's take a look at Coles for a second. Even though I'm done looking at stuff, Coles was one of my best stocks last year. Oh, yeah, look at that. All right, so who jumped into that one? That was Dev. All right, Dev, sit tight for a second. Here we go. All right, so we have our high of the year, 21.50. Okay, we hit it 3 times. Definitely not going over that. The bottom. Second week of April, 601. She goes from 21 to 601. 21. That's like a 70% drop. That's a big drop. 70%. All right, last 30 days. Well, there's your last 30 days. Up, down, up, down. This is going to find a bottom really soon. Look at where it is. Okay, you get your top up there. She's coming down. She's going to find a bottom soon. Look at the previous bottom is 14.75 right here. That's the previous 30-day bottom right there. And look, she's coming down. Number one, don't panic. That's number one. Don't panic. Number two, if you bought it at 17, as she's dropping, well, look at the 16s for this week. Holy cow! Is that right? Okay, look at that. See, right now it's at 15.37. Well, this week's 15.50s are going for 34. That's more than 2%. That's only 3 days. The 16s are going for 18 cents. That's still over 1%. Next week's, see, if I'm here and you bought it at 17 and she's dropping, I'd be looking at the 16s for this week. Because you can buy back the option that you already sold and then turn around and sell the 16s and pick up a little bit more change, depending on how many shares, of course. And then you can push it forward to next week and do next week's 16s, which is right about here, as this is still dropping. So wait till it opens tomorrow morning. I would wait until it opens tomorrow morning. See what she opens at. Is she lower? Great. I'd do the 16. If she turns around and goes up, maybe I'll do the 16.50 for next week. And the 16.50 for next week is going for 31. That's just a shy of 2%. Which, hey, I like that idea. All right. Hopefully that makes sense. Dev. Dylan, we could double down. Yep. UA, yeah. Okay, whatever. Okay. Hey, Julian, we're going to take a look at that tomorrow, if that's okay with you. Kevo, be prepared, expect the unexpected. Makes sense. Felix. RTX is defense company. Pentagon is increasing inventory. Okay. Chuck, we can take a look at VRT tomorrow. Okay, we're past 11 already. Craig Petty, SITC, never heard of it. Sweet Wander, how are you this evening? Jesse, how are you? Alex, how are you? Jay, good evening. What is the last stock you wrote down? Microsoft. So what makes you advocate for weekly options? Simple, safe, predictable, consistent, profitable. That's my philosophy. She show FVZW. Okay, I know what F is for. VZW, I have no idea what that is. Okay, 2 Saint, DraftKings. Nope, they haven't been around for 20 years yet. Brian, we already looked at Pfizer and Bristol Myers Squibb. D-King, DraftKings, we already said they're not old enough. Bloom Energy, never heard of them. Brian, MRK, I actually have some MRK. We can take a look at it tomorrow. Levi, Western Digital, tomorrow. Seagate, STX, tomorrow. Can you give us a list of stocks you look for, like Dividend Kings, etc.? Okay, iRod, you're relatively new here, because I give that list at the beginning of every show. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then Warren Buffett's list. Okay, next, let's keep on keeping on. Joyce, how are you? Nicole, how can I subscribe for your service? Oh, Nicole, that you could do. Hold a second, Nicole. I gotta admit, the cold drink is not as good as the warm tea. Thirst quenching, but not good for the throat. Nicole, amazing 2025. Now, Nicole, you could go top left corner where that little icon is there, little picture of me. You click on that, and that will take you to DM, which you can send me a direct message. You can send me your number. We can call. I can call you, me personally. I can call you personally, and I promise I won't try to sell you anything. Or you can sign up for a callback. I believe there's a calendar in there. Pick a time, I'll call you back, and we can chat. Roxy, Seagate, huh? STZ. Jerry Jones. How you doing today, Jerry Jones? Your fan club has completed the first stage of the club quest. Club cheers for. Okay, outstanding. Thank you so much for the information. You're welcome. For Burfel? That's an interesting name. Benjamin, thank you kindly. Eagle, what time do you usually start? 9 p.m. I will do that. Thank you. Hey, Nicole. Yeah, I'll chat. Because it's not right for everyone, Nicole. It's boring. It's monotonous. The same thing over and over and over again. So, Camera 1, done. 2, done. 3, done. 4, done. So we got 2 left to go, and then we're done for the night. I do like to try to answer each and every single question, and I'm going to do my best. Wouldn't they be less profitable? I don't know which one we're talking about. We already did that one. I love the teaching. Thank you, Giancarlo. Okay. Wealth Now. Is there any risk? Of course there is. There's always risk. There is risk if you lay in bed all day. There's risk if you get out of bed in the morning. There's risk as soon as you open up the door to walk outside. There's risk as soon as you jump in the car and put the key in the ignition. Life is risk. It all depends. What is the trade-off? You have to think to yourself, well, if I don't do this, what's going to happen? Well, if I do this, what could happen? If I don't do this, what could happen? There's risk everywhere. So there's nothing without risk. Temeko, if you sell a call, then you must roll the call if your strike is in the money. You don't have to. It's always going to be a numbers game. If it is in the money, well, you have to take a look at what did you buy it for? What did you sell against it? If it's in the money, great. Are you at a profit, a break even, or a loss? So the numbers are always going to be relevant to your point of view or context. So Dylan said Dow is down more today. I don't have any Dow, Dylan. Okay, yeah, but it's not below the low of the year. The low of the year is 2214, and that was last Thursday. Friday was an up day. Monday was an up day. Today was a pullback day. See, Dylan, I always say I look for 2 days to the upside. Here's your bottom. 2 days to the upside would be Thursday, Friday. Today would have been the third day. And no, it didn't go up. So no, I wouldn't have bought Dow because it didn't hit the third day. How is Shopify? You know, I actually have a Shopify store and I have no idea how to put them together. You'll do that? All right. I will do the calendar invite. All righty, Nicole. There no free time for October and November calendar is not available yet. I will send a message. I'll have to take a look at that. Uh-oh, look at me. NVIDIA, please, is hitting the 200. Now, we talked about NVIDIA a little while ago. Sent a message with my phone number. All righty, Nicole. All right, what else we got? Oh, low power. You know what that means? That one's turning off, which is kind of okay because we're just basically about done anyway. Yeah, we're basically done. I'm just finishing up whatever questions I have, and we're done there. We only have questions here and here. Okay, Dylan, we already talked about that. We could double, yeah, we did that one. UAMY. Boston Tom. What is UAMY? UAMY. U.S. Anatomy Corp. I'm going to say no, dude, only because U.S. Anatomy Corp was less than $1 a year ago. Less than $1 a year ago, shoots up to 8. Well, that's a big jump. That's not consistent. That's not profitable. Wait a minute, it is profitable. Sorry, it's not consistent and it's not repetitive, which means it's not going to do the exact same thing again. All right. Okay, look at me, JFB. What the heck is JFB? JFB. JB Construction. Hell no. Sorry. I don't buy at the high end of the year, number one. Number two, it has no option, so no. All right, over here. I could sell a call further out of the money that I would be fine with selling the stock. Anyway. Yeah, it's going to, okay, wealth now, it's going to be a, what do you call it? A balancing act. Okay, what did you buy it for? What did you sell? What did you collect? Where's it at now? Where does it look like it's going? What's the best move for you? To be safe, to have the money keep coming in. Because I got two criteria, two preferences. One, consistency of cash flow. I want that money coming in every single week. Two, preservation of my capital. I don't want to lose anything. Well, that sounds simple, right? Money keep coming in and not losing. Well, that's my criteria. Tamiko, yes, but if it's in the money, it can still be called away. So roll it out and up. Yeah, that makes 100% sense. I'm agreeing with you. Okay, thank you very much. Wealth Now, you're welcome. Alex, if I buy one contract, you're obligated to purchase one share, 100 shares. Okay, no. Because you see, you can buy one contract. You got to get the terminology right. So buying one contract, okay, you don't need to buy the stocks. However, I don't buy options. I sell them. So if I'm going to do covered calls, yes, I have to buy the stock first, then sell one contract. Alrighty. All right, next. CLJ. What was that? What do you think options sell? That makes no sense. BP. I bought CEG. I have no idea who CEG. Isn't that Conagra? No. Is that Consolidated Constellation Energy? Okay. I thought it was Consolidated Edison. Okay. I'm not quite sure what that means. You bought CEG. It hit its 50-day moving average yesterday. Okay. Not quite sure what that. I know what it means, but in this context, I have no idea. How much margin do you use? I use about 75% margin. I keep like 25 to 30 aside. Theo, we looked at that already. What do you think option sell? Did that one. AIRE. Julian, I have no idea what AIRE is, but I do know it's a no. Sorry. And Theo, Tesla's a no, has no dividends, and there's no way to predict where it's going to be. And hell no, I'm not doing Misty. What are your thoughts about Misty? Okay, Sky Marietta. Okay. There's always someone that likes this. There's always someone that likes MSTY. Okay. Now, Sky Marietta. I call it a piece of crap only because I call it a piece of crap because 2 years old yet. It's not even 2 look at the profits. Okay, Marietta, you ready? Here's the profits. 412. Awesome. 412. That's the first one. Second one. The first one. Second one. 250. It went from 412. It went from 412 to 250. That's not good. Then from 250, it went to 303. Okay, not bad, but still not as good as the 412. Goes from 303. Goes from 3 to 233. That's not good. Then from 233, it went to 194. That's down 2. That's not. Then 194, it went to 185. That's not good either. That's not good. This thing goes down more than it goes up. Okay, so I don't. They ram it down your throat, saying buy. It's great. But it keeps dropping, and it's not profitable. I don't know why people keep buying it, but they do. Is what it is. GLW. Dana Simkin. What is GLW? It's not that. That's for sure. GLW. Corning. Ooh, no. Okay, Dana, don't. I like it, but look. It's at the high of the year. Ask yourself this question. Okay, it's a serious question, Dana. Why are you buying something at the high of the year? Okay, you make your money buying low, selling high. Theo, are you talking about selling puts? No, I'm not. Theo, we looked at Tesla already this year. Can you please look at AIRE? We already did. It's a no. Cliff, thank you for that. Sky Marie, thank you. Lizzie, you're welcome. I apologize for the dumb question. It's not a dumb question. See, if you don't know the answer and someone has the answer for you, ask. Matthew 24, ask and you shall receive. Seek and you shall find. It's the only way to do it. You got a question, ask it. If somebody has the answer, no matter how dumb you think it is, it's taking you from where you are, the next step forward. However small and insane and trivial you may think it is, you now know something you didn't know before. So that's a good thing. Don't ever apologize for asking questions. Wealth now. So if I have 100 shares of a growth stock I like that want to hold, should I sell calls just to collect premiums? Why not? You don't have to do anything. Okay? But if you have 100 shares of a company that you like, and you want to hold on to it, well, yeah, you can sell covered calls against it. And then every week, just keep rolling it up higher and higher and higher. But if you don't want to sell it, don't sell it. Make that covered call far enough away from where the action is. Because we're here right now, GLW. Okay? GLW is at 82. Or wherever the hell it is. Yeah, 82. So all the action is going to be at the $82 area. So if you don't want to sell it, well, then do the 84s or the 85, which is further out. And as it gets closer, you push it out further. Have you looked at AEO lately? Okay. What are we looking at? Okay, we already did Nike. Why you choose dividend stocks only? Because dividend stocks are consistent and predictable. Capital One Finance, COF. What's SoFi doing this week? Hamburger Man, don't care. SoFi does not fit. It's not consistently profitable. It has not been around for 20 years. One more, please. VKTA. I can tell you that right now. No. Okay, Sky Mary, but I'll pull it up for you, and I'll say no to you twice. Ready? Here it comes. VHTX. No. Because we cannot find that symbol. Usually when it says we cannot find, oh, it says VH. I spelled it wrong. Sorry, that's my fault. VHTX. Viking Therapeutics. Interesting. Okay. Well, there it is. It's got weekly options. It's moving around nicely. But let's go to Yahoo Finance and see, is this company consistently profitable? Okay, so for there we go. KTX. Viking Therapeutics. That's probably why I've never heard of it. That's why I've heard no dividends. Okay, so it means I have no idea when to buy it, when to sell it. Cliff. M-O, that's Altria. That's definitely on my list. There it is. Altria. Look at that nice move. That bottom shoots up, pulls back. Now she's going up. 66.06. 66s. I'm going for 89. That's over 1.5%. Hell yeah. Why not? Okay. Mercado Libre. L-M-E-L-I. What the hell is that? M-E-L-I. Interesting. M-E-L-I. Let's do the same thing. M-O-I. Let's do the same thing. M-E-L-I. M-E-L-I. You are the vowels. M-E-L-I. All right, so what do we have here? All right, so we have another one. Another dividends. Why don't you use Thinkorswim under fundamentals to look up stocks, whether they're profitable? Why? Cliff, think about it. Think about it. Somebody's already doing it for me. The Dividend Kings. That list has been going on for decades. Okay? Dividend Aristocrat, Dividend Champions. The list is already there. Why would I need to look fundamentals? Whether or not the stock is profitable. The reason why I like dividends. Because a dividend stock is usually predictable year after year after year. No, you use Yahoo Finance. Thinkorswim under fundamentals. Hold on. Because apparently you're saying something that's not catching. Let's get out of there. Scanner. Okay, so on the scanner, we we have net change. Let's go all the way to the top. Okay, we get the ask, we get the ask size, the back volume, the beta, the bid size, call sizzle index, close, earnings per share. That's one, earnings per share. Front volume, last high, low, blah, blah, blah. Market cap, market maker move, net change, open, PE, price earnings, put sizzle index, blah, 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 volume different, weighted back, blah, blah, blah. It doesn't say consistency of profitability anywhere there. Cliff, am I missing something? Because it's not showing. The parameters aren't there. It does have earnings per share, but it doesn't give me earnings per share on how many years. Okay, so what am I missing? Analyze. How do I see how much I would make off of selling an option? Wow, I've never actually done this before. Probability analysis. Okay. Risk profile. Interesting. Add simulated trades. Okay. Economic data. Think back. Fundamentals. Here we go. Fundamentals. Well, let's put in 3M. 1, 2, 3. There we go. Ding. 3M. Okay. Okay, earnings per share, book value, cash flow per share, free cash flow, blah, 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 return on equity, return on assets, gross margin, blah, 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 profit margin, blah, 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 tax rate, interest rate, net profits, total asset turnover, finance rate, blah, 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 financial leverage, valuation, earnings per share, dividend yield, blah, 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 blah. Not anywhere does it tell me how many years this thing has increased its dividends. Source of value, SA3, blah, 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 safety industry, around 50%, transportation, blah, 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 blah. Consistent innovation and strategic acquisitions drive the market. Okay, down. Key trends, economic fluctuations, geopolitical factors, blah, blah, blah. Growth of emerging markets, evolving... Dude, it's not giving me what you're talking about. Am I missing something? You just use the Analyze tab and type in the stock symbol. Why? Analyze tab. Stock symbol. Yeah, that's exactly what I did. But nowhere on this whole thing, I just went through the whole thing. Nowhere does it tell me how many years consecutively this thing has been profitable. It doesn't tell me that. Yahoo Finance does tell me that. This doesn't. I'm looking at consistency of increased dividends. Dividend payout per share. Okay, fine. That's there. It doesn't tell me what the dividend was last year, the year before, the year before, the year before. 5-year trend. Okay, it gives me the 5-year trend. That doesn't help. That's only 5 years. I'm looking for 2 decades. That's 20 years. Okay, Cliff, do you see that? Okay, year over year. That's 2 years. That's this year, last year. Year over year. 5-year trend. Then it goes 2020, 2021, 2020. That's 5 years. That's it. I don't want to look at 5 years. I want to look at 20 years of profitability. Is the company consistently profitable? Don't get me wrong, it's interesting to look at, but it's not giving me what I'm looking for. Yahoo Finance does. We're at 11:30. Okay, I'm done. You guys have a great night, and we will see you again tomorrow. And meeting and done here. So you guys have a great night. You guys over here on YouTube number 3. Okay, over here, done and over with. Okay, done there, done there. Come on, done here. Hey, good night. And now, and this one, and now. You can look up whether the company's profitable dividends do not tell you whether. Wait a second. You can look up whether the company's profitable dividends do not tell you whether. Okay. Unfortunately, Mr. Cliff, I'm going to disagree with you. Okay. Because a dividend is a portion of the company's profits that they give back to the investors. So if the company makes more money, then the dividend will be higher. If the company makes less money, the dividend will be lower. It's just simple mathematics. The more profitable you are, the more profits they share with their investors. The less profits they make, the less profits they share with their investors. It's just simple math. So if they're consistently profitable, the dividends will consistently increase. Okay? The analyze towel will tell you whether they're profitable. Yeah, for the past 5 years. That's it. It's right there. 5-year trend. Where is the 20-year trend? I want to look at the 20-year trend. Okay, not the last 5 years. 20 years. All right. Guys, have a great night, and we'll see you again tomorrow. And